Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Treasury yields dip as traders await key US data and minutes from the Fed. New Zealand hikes rates, but by less than some expected. Underwhelming intervention. Oil holds a gain after a coordinated release of strategic crude reserves falls short. And the lira in freefall. Turkey's currency shatters all kinds of records as President Erdogan defends his push for low rates.
So, Tom, let's also take a look at the futures. They're a little bit mixed. So, again, the focus is firmly on what central banks could do because of inflation. We're also expecting some U.S. data a little bit later that could move the needle. And then we have the Fed minutes. For the moment, you can see the DAX futures, the Euro Stoxx futures, nothing huge. We have a bit of M&A, and then it's all about oil as well.
It is indeed. So a bit of a holding pattern in the equity markets. Looking ahead to that data, you're going to get consumer goods, of course, durable goods, mortgage applications, and the minutes from the FOMC and the Fed to give us a sense, a direction as to what happens with the taper and then the rate hike cycle. 3 rates now being priced in by the markets stateside. You're seeing gains of 0.1% in the UK, the FTSE 100. Iron ore is up again. That will play into the basic resources sector. France, similar gains of 0.1%. And over in Spain, it's flat. Let's have a look at the cross-asset board and see how things are playing out. We're talking about oil again, as Francine was saying. The market's looking past that coordination, that extraordinary coordination, really, in terms of the US aligning with the likes of China, India, the UK as well. But the market's looking past that disappointment from some that there wasn't more released onto the markets. The futures in the US are pointing to losses of 0.1% after a mixed close yesterday. Tech was lower, but some of the cyclicals, financials, were higher stateside. The US 10-year currently at 163, raising some of the gains that you saw in the yield yesterday, down by 3 basis points. The New Zealand dollar is in focus, of course. We had this in the headline, the fact that the central bank came in with a 0.25 point increase in rates. That was in line with a survey by Bloomberg, but some market participants clearly had expected a bigger rate increase. They're looking at 2% by the end of 2022. Brent in focus, up 0.4% at $82 a barrel. Fran.
Yeah, so the focus, of course, if you look at some of the sectors, is on some of the inflationary companies, certainly some of the sectors that would suffer the most from an inflationary swing. So, for example, we look at banks. If there's an interest rate hike, then that would be beneficiary for them. Energy actually leading gains, up 0.7%. Again, they're not huge gains, Tom, but if you look at what we heard from oil, certainly President Biden saying that it should be redistributed in terms of the retail gasoline prices at a 70-year high, that 10 cents that they're actually benefiting because of the release of strategic reserves, that it should be passed on to the consumer. Then basic resources, tech, both up some 0.5%. It's the autos and retail that are leading the losses. Autos down some 0.2%. So it's not huge moves. We're kind of in a range of, either falling or gaining between 0.3 and 0.4. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Art's Kathy Wood says the money manager is holding off on adding bets in Chinese markets amid concerns about Beijing's crackdown on some of the country's high-profile tycoons. Speaking at a webinar organized by Bloomberg Intelligence, the ARC founder says China remains a very innovative nation, but there are concerns over the erosion of incentives for entrepreneurs. AstraZeneca is opening labs for its COVID products at a new UK R&D site this year as the drug maker defends its vaccine's effectiveness. CEO Pascal Soriot says its shot could be the reason the UK is faring better with hospitalizations than Europe. In an interview with Bloomberg, he also discussed the durability of vaccines.
It's likely that this pandemic will be endemic over time. I mean, it is already more or less endemic in some geographies in the world, which means it will be like the flu. It will come back on a regular basis, and people may have to be vaccinated. Now, the question is, do you need to be vaccinated every year, every 2 years? We don't know that, and it will depend on the durability of these vaccines.
Sources tell us KKR is considering boosting its offer for Telecom Italia after the top investor Vivendi said $12.2 billion for the bid was too low. Telecom Italia said on Sunday it had received a preliminary bid from KKR of 50.5 euro cents per share. KKR is said to be debating whether 70 to 80 cents a share would seal the deal. Vivendi owns around 24% of Telecom Italia. Best Buy shares have tumbled after it warned its margins are being hit by a spike in organized robberies. The U.S. electrical goods retailer said the burglaries, sometimes by large groups of people running in to steal items, had also been traumatizing for workers. Slowing sales and promotional discounts are also weighing on the company's bottom line. That's the Bloomberg Business Flash. Tom Francine.
Laura, thank you very much indeed. Okay, let's bring in our markets reporter, Justina Lee. Justina, there's a lot of data, as we're mentioning, out of the US, also the Fed minutes. Where is the focus of the markets going to be in terms of trying to get a direction, a steer, as to the next response from the Fed?
Right. I think a lot of traders are really going to be watching to see if there are any clues on how fast the Fed plans to taper asset purchases. And of course, a lot of that is going to depend on how they see inflation right now. Are they a little bit more worried after the recent CPI numbers that maybe it's not as transitory as they at first thought? And I think this is really coming in an interesting time because we've had this big surge in real yields recently after Biden renominated Powell, which kind of made people price out, a more dovish trajectory under Brainard. So I think people are waiting to see if, the Fed is going to change their mind on that front.
Yeah, and there's a couple of policy moves, including what we saw in New Zealand.
Right, exactly. And I think, that's why markets have been reacting so strongly lately, because it's not just about the Fed right now. It's about this seeming tightening trajectory that a lot of global central banks are kind of embarking on. And this is really also kind of moving stock internals. We saw that big plunge in tech in the last 2 sessions in the US as well.
Is there any sense of whether that continues for technology? I mean, particularly the meme stocks, some of those profitless software companies, the ETFs looking at IPOs, all taking a hit. Maybe this is a healthy paring back of some of these bets?
Right. I mean, we've kind of seen this pattern quite a lot in the last few years, which is when bond yields rise, usually tech does poorly. And it's exactly like you said, especially with profitless tech stocks, when discount rates go up, you can see investors kind of losing a bit of patience for those profits to eventually materialize. So it seems like with Treasury yields kind of down a little bit today, maybe we'll have like the NASDAQ catching a bit of a breather. But I think in terms of those stock internals, people are really going to be watching the macro moves as well.
Justina, we're also, of course, looking at the price of oil. I mean, we're talking about it extensively yesterday. It was a little bit disappointing in terms of the amount released, and it was widely expected. So what does it do for the price of oil? And actually, will that be passed on to the consumer?
Right, exactly. I mean, the surge in oil has really kind of put pressure on consumers lately. And I think, it was kind of interesting because we actually saw oil, rose further, as you said, kind of yesterday after that headline. And it seems like people are also waiting to see what the reaction from OPEC is. And I think that will be kind of a big factor in the U.S. inflationary picture going forward.
Yeah, you're currently looking at Brent at $82 a barrel, WTI at $78 a barrel. So some divergence between Brent and WTI. In terms of dollar strength, and we've just seen such a strong run up over the last few weeks and months for the greenback. Obviously, that is going to be tied to whatever happens regarding taper and expectations around rate hikes. But do we expect broadly more sustained upside for the greenback, and how does that read across to particularly the EM space?
Right, exactly. And I think people are really looking at kind of the relative pace of tightening all across the world. I mean, for a long time, people were expecting, I guess, the U.S. to go a little bit faster. I mean, and it seems like that is still the picture lately, especially with kind of Powell still at the helm of the Fed, and maybe people are expecting that tightening pace to kind of go forward.
Justina, we're also hearing, KKR said to weigh raising its Telecom Italia bid to win over Vivendi. We also have, something else that could be sold for $8 billion. Are we going to see just much more M&A in general because of some of these valuations, especially in Europe?
Right, exactly. I mean, I think that's a really kind of interesting question because we have seen a lot of deal activities lately, and I think this was kind of another big one that kind of people are looking at.
Justina, thank you so much. Justina Lee there with the very latest on the markets. And we have some breaking news out of Germany.
Yeah, we've been watching for this, and Maria today on the ground in Berlin is going to flesh this out for us. But Olaf Scholz coming out and saying that he sees a coalition deal to become the next German chancellor. The German SPD, the FDP, the Greens will present a coalition deal today. That's going to happen today. So significance in terms of moving forward on bringing these parties together for that coalition. And Maria's talking about the challenges, of course, notably COVID.
Yeah, and yesterday we already had a bit of a breakdown, or at least a glimpse of the cabinet. It wasn't 100% confirmed, but we definitely have that template. So we'll see if Olaf Scholz, the new chancellor of Germany, actually confirms that. Now, coming up, much more on the markets. We also delve into Germany. We'll get into what the moves in yields could actually mean for stocks with Beata Manti, global equity strategist at Citi. This is Bloomberg.
An extra $1 trillion in spending, not increase inflation.
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. 12 minutes into the European trading day, and you can see we're kind of trading sideways. A little bit of a lift in the last 10 minutes or so to the European stocks, gaining some 0.3%, but really the Q will depend on what we get from the Fed minutes, and then a little bit of U.S. data. It's all about monetary policy once again. Now, let's get some breaking news in the last few minutes. We understand that Germany's Social Democrats, the Greens, and the Free Democrats are to present a coalition agreement to form the next government with Olaf Scholz as a head. Now, a policy agreement has finally been sealed, we understand, and will be presented a little bit later today before it gets put to a vote. We're also expecting a news conference at 3 p.m. Berlin time. So let's get straight to our reporter on the ground, Maria Tadeo, who's in Berlin. Maria, is this pretty much expected? It's the kind of coalition that we thought we'd have. Any surprises? And, how did they deal with COVID?
Yes, Francine, and that is a big question for this coalition. Now, if you take a step back and you look at the election that we had on September 26th, the fact that Olaf Scholz has been able to bring three different parties together, that he's able to get this done in about 2 months, should have been big testament to his political ambitions, and it should have been to some extent a big win for the SPD. The problem is that all of this has now been eclipsed by the pandemic. There's many questions that Olaf Scholz is going to have to face. Does he want to go for a vaccine mandate the way the Austrians have done? Does he want to go for more restrictions in the country? We are seeing a number of regional leaders saying the federal government, the next government, has to come with a plan. Now, in terms of the names that we're expecting, of course, we're keeping a very close eye on the finance ministry. I have to say, in Berlin, it's almost a given now that this will go to Christian Lindner. There's also a lot of speculation that there will be a mega environment ministry combined with a works ministry that would go for the Greens. But the big question, and again, it goes back to the pandemic, is who is going to be the next health minister? And just yesterday, that was proven to be a very difficult job to fill. So there's a lot of focus in terms of who is that health minister, and who's the person that Olaf Scholz will trust to deal with this pandemic.
And Maria, obviously we can't unpick the pandemic and what's happening in terms of COVID-19 and the spread in Germany from the economy, but do we know what the economic focus, the financial focus will be for this team once they take their seats?
Yes, and you know, when you look at the campaign, Olaf Scholz said that he wanted to increase the minimum wage. She talked about rebalancing the German economy. There's also big questions that will come with the industrial policy. We know there's a lot of regulation that is coming over from Brussels, in particular the Fit for 55. This is something that for the German industry could be key in the next 10 years. There's, of course, all the climate agenda that is also coming in from Brussels. The Greens have also said they want to accelerate their transition out of carbon. And then, of course, you have everything that has to do with China and how to make that relationship a two-way street. So there's a lot of the agenda, but I would argue the first focus point and the real test for this pandemic is it's how to deal with COVID. That will be the big mission, a big crisis for Olaf Scholz to deal with.
Maria, thank you so much. Maria Tadeo, they're in Berlin for us, and we understand that for the vote, they're aiming for a week the 6th, so we could have a new government in place pretty soon. Now let's turn to the markets. Joining us is Beata Manti, a global equity strategist at Citi. Beata, thank you for joining us. We were just talking about some of the coalition movements over in Germany, and it's very clear that the biggest concern and the biggest challenge for any person in charge at the moment in Europe is how to deal with COVID. Does that mean that you have to, look and take down some of your forecast for equities, or do you think valuations are so low that it won't make a huge difference?
Good morning. Thank you for having me here. In terms, you're right that the growth concerns are #1 concern on investors' minds right now. And we have to remember that we are entering these new lockdowns in Europe with growth already subsiding. So our economies have been already cutting their GDP forecast for the last 2 months. So globally, we now expect a 4.2% GDP growth. A month ago, it was 4.4% of GDP growth. And of course, if Germany went into the full lockdown, that would absolutely affect the GDP as well. And then what matters for equities, it could also affect the EPS growth for the next year, right? And like a simple rule of thumb that our economists have out of the example of Austria is that 1 month of lockdown, of complete lockdown in the country, takes away 1% of annual GDP. So 1 month is 1% of annual GDP off. So definitely we are going to see effects of it.
Yeah, so certainly not insignificant. So when you weigh that up against the commentary that we've had from some ECB officials, some slightly more hawkish commentary from some of the ECB officials, arguably, do you buy what they've been saying, that March stays for the end of the PEPP, or is the ECB going to have to turn more dovish to support the economy?
The view of our economists is that indeed a PEP program is going to finish in March, and then from March on, the asset purchases program is going to start to get diminished as well, regularly month after month, and will finish by the end of the year. But of course, we are going to hear more about it at the next ECB meeting, and I'm sure this is something that they are considering at the moment with the growth
Beata, are you
pressures.
Yeah, are you expecting equities in general to actually go up from here, and what do you buy with conviction?
I think a simple way of putting our equity views is that we are short-term cautious, long-term bullish. So short-term cautious is because of the combination of all the factors we've been mentioning today. So pressures on growth. So we do worry that actually pressures on economic growth are going to have implications on the EPS growth. So actually we expect EPS growth forecast to come down next year. They will be still positive, but we think that the consensus is slightly overly bullish. So downward pressures on growth with the combination of higher rates, and I'm talking about the Fed and higher 10-year yields, 3 hikes that we have in our forecast, and in the combination also with higher valuations. I think these 3 valuations, tighter monetary policy, and growth pressures could be putting pressure on equity markets in the near term.
Okay, Beata, I know you buy into the tilt towards cyclicals and towards value. Where does that take you in terms of regions?
So it all comes back to the monetary policy, right? So if the Fed does tighten, as we expect, we think that 10-year Treasury yields are going to go all the way up from around 1.6, where they are right now, to 2% by the end of the year. And this will be done with the help of real yields moving higher. And higher real yields are crucial for us in our view. So lower yields historically in the near past have been the biggest driver of growth over value. So we think this is going to reverse. So our #1 call out of value is to buy financials. We also globally like out of cyclicals, we like industrials.
In any part of the world,
industrials are the, so
yeah,
financials, industrials outside Europe really. In Europe, we like out of cyclicals, we like financials, but we have a little bit of a defensiveness in our overweights as well, because we did worry that some kind of slowdown concerns would hit the market. So we are also overweight, and this is kind of like a contrarian call, we are overweight healthcare in Europe, and we are overweight communication services, which effectively is telecoms.
Beata, is buy the dip still a potent force in these markets?
Definitely. We have this framework in place that is called bear market checklist. It is one of the most popular frameworks we've done, and we always get asked about the updates every time that the market goes down. And it is a compilation of all the different factors in the market and in the economy. There are 18 factors, and all that they had in common in the past is that at the times of the market peaks, they've been sending this red warning signs that the end is imminent. Right now, there are only 7.5 out of 18 factors flashing these red warning signals. So basically, what our bear market checklist is telling you is to buy into the next dip.
I like the way you put it, Beata. Is there anything that actually you think where the end is now? Is there anything that you'd be selling off now because just valuations don't make sense and there's no upside from here?
Just coming back to this real yield upside, right? So if value is going to do well, of course, the other side of the coin is that the growth is going to underperform. So we've been buyers of growth for a long time, but we have recently downgraded the US to neutral. And we have also downgraded the tech to neutral globally, while another growth trade, consumer discretionary, is an underweight now.
Okay, Beata Mante, global equity strategist at Citi. Thank you for joining us this Wednesday morning. Let's get in and check in with some of the stocks on the move at the open with Lizzie Burden. Lizzie, what are you looking at?
We start with Ryanair, Tom. The CEO, Michael O'Leary, said last night that he's expecting a bumpy Christmas for the airline after those lockdowns were announced in Austria. And he also sees pressure on bookings next summer if the US also reviews reopening its borders. But contrast those comments with the CEO of Virgin Atlantic, Shai Weiss. He says he doesn't see a tightening of US and UK borders because the European flare-up's more about low vaccine booster take-up than new viral threats. But we'll be keeping an eye on Ryanair this morning, down so far. Virgin Money as well, we're keeping an eye on. The British banking and financial services brand, it posted its full-year results today. The big thing, though, is that it's digital transformation. It's closing almost 1 in 5 branches, and Jefferies analysts say that that's going to weigh on profits, so down so far. And finally, we're watching Johnson Matthey, the chemicals giant. It's on the brink of falling out of the FTSE 100 at its quarterly review of the index next week. It posted its interim results, posted a loss, and the big story here is it's abandoning its venture into car batteries. Berenberg analysts are saying that with the new boss, the group could be even more likely to break up, but it's in the green so far.
Thank you so much. Our Lizzie Burden there with the very latest on some of the big moves that we're watching. I mean, the other big thing, and it's interesting, every day I feel like there's a $10 billion deal by private equities. Yeah. I mean, Tom and I joke about it, but it does feel like it's certainly the second day in a row. Global Switch does, I mean, I wasn't sure what it did, but it's a data center, and private equity is circling.
Yeah, private equity is back in the play. They've got a lot of cash at hand, of course, and we've seen the KKR bid for Telecom Italia. They've raised that. We're watching that deal as well. A lot going on. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the quarter three was the quarter that was most affected.
Welcome back briefly to the Open. We are 26 minutes into the European trading day. You've got 0.5%. Those are the gains across the European markets. Basic resources at the top in terms of sectors. Travel and leisure at the bottom. There's plenty more coming up. This is Bloomberg.
there's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Now, Treasury yields dip. Traders await key U.S. data and minutes from the Fed. New Zealand hikes rates, but less than some expected. Underwhelming intervention. Oil holds a gain after a coordinated release of strategic crude reserves actually falls short, and the lira in free fall. Turkey's currency shatters all kinds of records as President Erdogan defends his push for lower rates. So if you look at the markets, Tom, my sidekick, my co-anchor, we kind of look at the markets every day, and they're kind of in a holding pattern, I guess, waiting for data.
Yeah, absolutely. It's the FOMC minutes, but also that data out of the US. It's going to inform the view as to where the FOMC and Jay Powell goes in terms of the pace of the taper, and of course what that means for bringing forward the rate hike cycle. 3 hikes now priced in by the markets in the US in 2022. You're seeing some pretty decent gains across Europe, 0.4%, making up for some of the losses that we saw yesterday, but also wrestling, of course, still with the rapid pace of COVID-19 infections. You had the news out from Germany. Olaf Scholz is going to be the Chancellor, and he has formed the coalition. We're looking ahead to the presser later today to get more details, who's going to be taking some of the top spots within that coalition, as Germany, of course, the new leadership will have to face up to the crisis around COVID there. The DAX is currently flat, gains of 0.5% in France, gains of 32 points on the CAC Garonne. Here in the UK, similar picture, gains of 34 points. Basic resources is part of the mix there. Iron ore is higher, oil prices also in the mix, pushing up, looking past that reserve release by the US, the UK, India, China, and South Korea. Let's change it on, see how things are breaking down then on sector-by-sector basis. It is basic resources that is at the top of the list. Energy also gaining 1%. In the red, you're seeing travel and leisure. Not a big surprise, given the question marks about additional policies put in place across Europe to restrict travel and movement as infections continue to take their toll. Also, auto parts lower by 0.3. That is the shape of play across your sectors. The oil story is still front and center for us as well. Higher again this morning. We talked about that. The market's looking past this reserve release. That is after posting the biggest gains, this is the context, in 2 weeks on Tuesday. The US's decision to release 50 million barrels of crude in concert, interestingly, with China, but also Japan, India, South Korea, and the UK falling short of expectations. Let's get more then with Dan Murtaugh from our energy team out in Asia. Dan, what has been the reaction? We talked about the fact that markets sort of look past this. Is that going to continue? And what can we expect from OPEC Plus?
Yeah, the reaction was a little bit of disappointment. You know, this SPR release has been talked up so much over the past month, with Biden, going from country to country trying to talk people into it. And in the end, it's large in historical terms, but not nearly as big as some analysts had estimated. And a lot of it is sort of phony. 18 million barrels of the U.S.'s release was already planned. It's just going to be accelerated. Another 32 million is just an exchange, not exactly. The oil will have to be returned eventually. And so, the market had already priced in quite a big reserve release. Yep. And then when numbers actually came in, oil prices fell, as we saw.
So, Dan, when you look at actually, the money that you save, so the strategic reserve, how much does it help consumers on, retail gasoline prices in the U.S.?
We've seen some analysis that says about 10 cents a gallon could be saved from this, but a lot of it depends on how OPEC responds. If Saudi Arabia is annoyed by this release of reserves and OPEC decides to not increase supplies as they've been promising, then that could turn around and keep oil prices supported. So we're going to have to take a look and see how the OPEC Plus meeting next month sort of resolves this.
Dan Murtaugh, thank you so much for joining us, of course, from our energy team, and we'll see everyone now trying to figure out exactly what OPEC Plus does and whether we see a global fight of control of oil. Now, as a new COVID wave spreads across Europe, it's a critical time for British pharmaceutical company AstraZeneca. They're opening a new research center in Cambridge and are switching to a for-profit model for the COVID vaccine. Well, we spoke to the AstraZeneca chief executive, Pascal Soriot.
It's likely that this pandemic will be endemic over time. I mean, it is already more or less endemic in some geographies in the world, which means it will be like the flu. It will come back on a regular basis, and people may have to be vaccinated. Now, the question is, do you need to be vaccinated every year, every 2 years? We don't know that, and it will depend on the durability of these vaccines. So again, that's why we need more data, more follow-up. And collecting data is absolutely fundamental, because right now we are in the urgency of the moment, which is to stop this pandemic from spreading. But we also have to think about how we're going to live with this virus being endemic, like the flu is. And therefore, how often do we vaccinate people? Only time and data will tell us that.
Is that why you've recently also changed this, for-profit model? And would it have been wiser to wait for the WHO to call it an endemic instead of a pandemic?
Well, you have to think about the fact that the for-profit approach, which, by the way, as a reminder, is always going to be a modest profit, applies to new orders. So the new orders will be delivered mostly next year. So we are really talking about next year. Now, next year, hopefully, we will have, as a society globally, made even more progress in terms of vaccinating people. So that's the environment that you have to consider this decision. Number one. Number two, our price will always be quite reasonable. So it will go from no profit for some countries to some profit for others that have more ability to pay. But we will always look for modest profitability, because at the end of the day, our company is about cancer. It's about cardiovascular disease, respiratory disease, rare diseases. And we will never look to make enormous profits out of this vaccine.
Pascal, Prince Charles has opened your new £1 billion research and development facility in the UK. What looks most promising in the pipeline? What are you most hopeful on?
Sometimes people ask me that question, and it's always like choosing between your kids. I mean, which one do you prefer? I like all our products. We have a tremendous lineup of new products that treat cancer. Of course, recently we had absolutely tremendous results in breast cancer. With a new product, we are developing a so-called antibody-drug conjugate that really delivered amazing results in the treatment of HER2 breast cancer. We also have had results in kidney disease, heart disease. We've also had other results in liver cancer, biliary tract cancer, which are cancers that haven't seen much progress in the last few years. We've had results in the treatment of Wilson disease, a rare disease which is an accumulation of copper in the body. So we've had results across a whole range of conditions, and we continue building the pipeline. And here in Cambridge, we are at the heart of science, really, in the Cambridge community, and we have tremendous technologies to develop new products for the future.
Well, that was the AstraZeneca Chief Executive, Pascal Soriot, on the new for-profit vaccine model and their next steps over the coming years. You can watch that full conversation a few weeks from now on the next episode of Leaders with Lacqua. I mean, it was a timely interview, also because we're seeing all this COVID resurgence, and this is probably into the winter months, you know, the biggest concern for a lot of these politicians is what do you do? Do you make it mandatory? Do you lock down the ones that are unvaccinated? But New Zealand, good news, is actually opening its doors to people traveling, I think, in a couple of weeks.
Right, so New Zealand is starting to relax. We've seen a similar thing from Australia as well, another country. They've kind of pushed this zero COVID policy, and they've walked back on that. And the focus here, of course, in Europe, the UK, is on booster shots. Certainly the UK government is really trying to ramp up boosters.
I have mine December 24th.
You've got yours lined up.
It's the earliest I could do, right before Christmas. It was interesting speaking to Pascal Soriot is because I think there was, you know, in our minds, or at least in my mind maybe 2 years ago, the idea that once we get over the pandemic, then we could reopen as a world, that, you know, we deal with it and move on. And he was also very clear that, you know, it really depends on country to country. So it depends on the kind of vaccinations that you've had. It depends on the kind of, you know, policies that you're deploying. And so it's very difficult to see like the whole world coming together in and out. So you're going to have countries where you see lockdown and countries that are doing much better.
Yeah, and if that makes it a more complicated process, the whole thing. We're seeing in the US, Michigan, for example, very high rates. They put in place very strict measures at the start. They're not doing that now, and they're betting very much on the response in terms of the medication that's going to be coming through from Pfizer and others in 2022.
Yeah, and of course it depends on all the ICU beds that you have or not. So that, you know, is a percentage of the people that are infected. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Olaf Scholz is set to succeed Angela Merkel as German Chancellor after forging an unprecedented alliance to govern Europe's largest economy. After nearly 2 months of intense negotiations, Scholz's centre-left Social Democrats have finalised an agreement with the Greens and the pro-business Free Democrats. The three leaders will hold a news conference at 3 p.m. in the German capital. The Kiwi fell after New Zealand hiked its benchmark rate and signalled it will need to tighten policy faster than previously expected in order to contain inflation. The RBNZ raised borrowing costs by 25 basis points to 0.75%, as predicted by most economists. The central bank's latest forecasts show it expects to lift the cash rate to 2% by the end of 2022, a year sooner than projected 3 months ago. The Turkish lira has steadied after plunging to a record low of more than 13 against the dollar, falling as much as 15% at one point yesterday. Bloomberg understands the currency crisis triggered an unscheduled meeting between the president and his central bank chief. In a statement, Turkey's central bank said the currency moves were, quote, completely detached from economic fundamentals. China has called on people to, quote, stop the malicious hype about the tennis star Peng Shuai. Her disappearance earlier this month after alleging sexual assault by a top Communist Party official caused international outcry. A foreign ministry spokesman said the case should not be politicized. Peng was seen in images released over the weekend by Chinese state media and the International Olympic Committee. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Okay, Laura, thank you. Coming up, Bitcoin slumps. That's as the Indian government prepares a bill to regulate cryptocurrencies. We've got that story and the details next. This is Bloomberg.
common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector, in Scotland around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time that
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Welcome back to the Open, everyone. 44 minutes into the European trading day, and of course, the picture is a little bit, well, not uncertain, but certainly we're, trading range bound. The Stoxx European 600 gaining some 0.5%. It is a little bit higher than we saw a couple of just minutes ago, but the focus firmly on the Fed minutes, the focus on the U.S., of course, data coming out later today, and then a little bit of M&A here and there. Then the million-dollar question is probably what Jamie Dimon was thinking, talking about China, making that joke about the fact that JP Morgan will outlive the Communist Party in China. I don't know how it will be taken by authorities, but I'm happy, to be joined by our Chinese expert.
Well, yeah, I'm also a little uncomfortable with that term, but thank you. I'll take it for now. Yeah, he doesn't mind living on the edge, life on the edge, does he, Jamie Dimon? I mean, they've got, what, a $20 billion exposure to China, and now he's comparing JP Morgan and how long it's going to last to the Communist Party. It's obviously sensitive. So far, the team over in Asia have said they haven't seen much in terms of state media or official response, so maybe they can weather this, but we know that the Communist Party has very thin skin.
Yeah, living on the edge, I like that. Now, India preparing a bill to regulate cryptocurrencies, which will be presented to Parliament next week. The government is proposing to help the central bank create an official digital currency. News of the bill appears to have sparked a sell-off on exchanges popular with Indian investors. Well, joining us now is Bloomberg's Tracy Alloway, the expert when it comes to all things crypto. Tracy, first of all, what exactly are we seeing in India? Because it looks like they could be supportive of crypto, but, trying to safeguard some of the smaller investors.
Yeah, I think the big question right now is there's a lot of speculation around this bill. And you have to remember, the thing that came out in the past day was just a short statement on a draft of a proposed bill. So things are very much still in flux. But I have to say, the initial reaction within India itself to this news seems to have been one of basically panic. So we saw investors sell off a bunch of altcoins. Things like Shiba and Doge were at one point down more than 20% on platforms that are based in India or popular with Indian investors. And then even for Bitcoin, we saw that was down almost 14% in India, but basically, down 0.5% on something like Binance or Kraken. And again, I think we're going to see some volatile movements in crypto going forward because there is going to be speculation around what exactly is going on with this bill. And again, Bloomberg just reported now that actually India may be considering a proposal to treat cryptocurrencies as a financial asset, so maybe limiting retail investors' involvement in crypto, but still allowing big institutional investors to get involved.
Tracy, does that price discrepancy that you noted there between the selling pressures and the prices we're seeing in India versus the rest of the world on some of the other exchanges, does that create an arbitrage opportunity for investors?
Yeah, so this is one of the ultimate ironies when it comes to crypto, which is supposed to be this decentralized money. It is still very, very difficult to move it between exchanges across national borders without necessarily running into, individual sovereign laws. So for something like India, you might see a massive discount on Shiba or Doge, but it's going to be very, very difficult to go into that market, quickly buy crypto on the cheap, and then sell it somewhere else for a higher price. And here we have to talk about the Kimchi Premium. I mean, this was the famous price discrepancy in the market, basically an idea that in South Korea, Bitcoin was trading for far higher prices than it was in the U.S. or elsewhere. At one point, I think it was 50% more expensive than in the U.S. So if you could go in that market, you could basically make like $15 for every $10 you put into Bitcoin. So free money on the table. But of course, the problem is you can't really do it in scale. There are regulations around taking won out of South Korea. And again, you're going to run into this problem in India. So yes, there's a big arbitrage opportunity. It is very, very difficult to actually make money off of it.
Tracy, thank you so much. Tracy Alloway also with a great story that she wrote today saying, talking a little bit more about this huge arbitrage opportunity that could be opening up in India. Now, coming up, Turkey's lira in free fall as President Erdogan continues to campaign for lower interest rates. We'll bring you the very latest on the Turkish currency next. This is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. 52 minutes into your European trading day. Gains of 0.5% across the benchmark stocks Europe 600. The breakdown is this. Gains of similar picture, 0.5 here in the UK. The CAC 40 is gaining 0.4. Slightly less in Germany. The DAX just eking out some very, very minimal gains. You do have some politics there, of course, the coalition being formed. We're going to get more on that. Olaf Scholz will be the Chancellor. On the sectors, energy, basic resources at the top, travel and leisure at the bottom. Let's switch focus to the emerging markets, FX, and the story of the Turkish lira now. It is in free fall. It has been for the last few days. Stabilised a little bit in today's session. It has shattered all kinds of records. And that, of course, is as President Erdogan has intensified his campaign for lower interest rates, plunging the currency deeper into a crisis. Our emerging markets chief economist, Zayed Dawood, joins us now. Zayed, where do we stand on this? Is it fair to characterize the central bank of Turkey as Erdogan's central bank? And if so, can we expect further cuts in the face of very high inflation?
Well, yes, it is very much Erdogan's central bank, and that hasn't been good for the lira. It's down more than 40% year to date, and is due largely to the domestic factor, which is basically the central bank has been completely taken over by the political leadership, is cutting rates in the face of rising inflation. The policy rate is now more than 500 basis points below inflation. That's much lower than the historical norm, and that's much lower than other emerging markets. And that hasn't helped the currency. And that's also happening in the context where you have rising global interest rates in the US and elsewhere, which has also contributed to the decline in the lira. But if you think about what happened to the lira yesterday, it was down more in one day than most other emerging markets were down for the whole year. And that's telling us that the idiosyncratic factor, the local factor, has been much more important than the global factor.
Ziyad, I mean, we have a Bloomberg story, actually, that just crossed the Bloomberg terminal saying that, you know, this Erdogan lira experiment will actually test his grip on the country. I mean, does this weaken him if it goes badly? And, you know, what are the chances that it doesn't go badly at this point?
I mean, it's going badly enough, and there is elections in 2023, which is motivating the whole, everything that's going on these days. We've seen this happen before, Francine. We saw that happen in 2018, we saw that happen in 2020, and in both cases, we saw a U-turn from Erdogan. We saw emergency hikes in interest rates in an attempt to stabilize the currency. Will this be repeated now? I think the threshold pain is probably hard this time around because there's elections down the road in a few months' time, and the president does not want the economy to slow down before the elections. But I think if you look at the playbook from previous episodes, the only way to stabilize the currency is probably higher interest rates, and we expect that to come sometime next year.
Zad, let me fold two questions into one. Should we be looking potentially at capital controls in Turkey? Is that a prospect? And what is the read across to the rest of EM?
Well, for capital controls, it is sort of the nuclear option. Turkey has large FX needs. It has large foreign currency debt that it needs to roll over, and imposing capital controls would not help in funding its external financing needs over the coming months. Is it possible? It is possible, but it will have ramifications that could hurt the currency even more. In terms of the broader EM, we haven't seen contagion yet, but the lesson from 2018 was that you had rising interest rates in the US, and you had a blow up in pockets in emerging markets. That wasn't good for EMs in general. And the issue is now some EMs that are vulnerable to the risk of capital flight might be exposed to the risk of contagion from Turkey.
Ziyad, thank you so much. We also have a great quick take, actually, that just crossed the Bloomberg terminal this morning. Ziyad Dawood there, Bloomberg's chief emerging markets economist. I mean, certainly it's not dull because there's so much to talk about when it comes to Turkey. And when you look at, the quick take, it's really, it kind of explains what's his beef with higher interest rates, who, follows him, and actually how does this end? They didn't answer the last question because I think it's still all to play out, but certainly an interesting market move.
I mean, very idiosyncratic, and Erdogan following his own economic course. We'll see how it plays out, of course. Also worth following up and noting that what's happening in Germany, and Maria today is on the ground in Berlin for us, but in terms of the fact that we now have a coalition, Amira has pointed out, they came to this very quickly. Olaf Scholz, as Chancellor, we'll see what the makeup is.
Yeah, we'll see what the makeup is, and then we'll see exactly what that means also for the rest of Europe and how they deal with COVID. That's it for the European Market Open. Bloomberg Surveillance Early Edition is up next. We look at the markets, and of course, we look at foreign policy as well. This is Bloomberg.
up front, when your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point. When the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Today, I'm announcing that the largest ever release from the U.S. Strategic Petroleum Reserve to help provide the supply we need as we recover from this pandemic.
It's likely that this pandemic will be endemic over time.
I don't think myself that it will have an impact on our intention to wind down the pandemic emergency purchase program.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Olaf Scholz set to become the next German chancellor. The Social Democrats strike a coalition deal with the Greens and the FDP. We're live from Berlin. Treasury yields fall before the FOMC minutes, while traders continue to grapple with the prospect of a more hawkish Fed. And underwhelming intervention, oil holds a gain after a coordinated release of strategic crude reserves actually falls short of market expectations. Well, let's check on the markets. A lot of the focus, of course, is on U.S. data. A little bit later on, a lot of the focus is also on those Fed minutes. It could give us a bit more of a glimpse of what the Fed is thinking, or certainly what kind of data points we should be looking at. European stocks, 600, you can see getting some 0.5%. The picture's a little bit muted, depending on what country we're looking at. But overall, the focus is definitely on gold. You can see Brent different to what WTI is doing. And we have to look at the price of gasoline. We did hear from President Biden that also these gasoline producers should pass on the benefit to the consumer, not keep it for themselves. And then the U.S. 10-year yield, 164.79. Now, if you look at some of the other things we're watching, I don't know whether we have a map of Europe, but it's always a good thing to see the individual country reaction. Now, there's quite a lot going on in Germany because of Olaf Scholz. We understand that there's a press conference at 3 p.m. today with that coalition finally done and in place. We also have some IFO numbers. Actually, we'll also be speaking to the IFO head in just a couple of minutes to understand how they will deal with COVID. So that German business confidence index at 96.5, pretty much in line with expectations. But it's interesting that even on the back of that, it doesn't have a huge impact when it comes to the DAX. So there you go, actual 96.5, not a huge difference from the estimate, a little bit lower than before. Well, stay with Bloomberg because a little bit later on in the program, we speak to the IFO president, Clemens Fuest. If you have any questions for him or any of our guests, you can IB plus TV Go, or you can also tweet me at Flacqua. So let's get back to Germany. Olaf Scholz, the next German chancellor, that's as the Social Democrats, Greens, and FDP agree to form a new government. The coalition will take office as Germany weathers the worst outbreak of COVID since the pandemic began. Well, with more on all of this, our reporter Maria Tadeo is in Berlin. Maria, so we're expecting a press conference a little bit later on. It's all about COVID. If everything goes smoothly, when does he actually take over?
Well, Francine, this is the way that this is going to work. At 3 p.m., we finally get what this government deal finally entails, how he's managed to bring over 3 different parties to work together with a government plan for the next term. Now, after that gets presented, the rank and file members of each party will have to approve it. And then finally, you get this official, and he is sworn in. And the expectation, and this is what the SPD has always worked on the basis, that it will be done before the week of December 6th. Now, this is a government, Francine, that as soon as it takes office, will go straight into crisis mode. Olaf Scholz will have to answer a lot of difficult questions around the pandemic. This is everything that Germany cares about at this point, whether or not we get a vaccine mandate the way that the Austrians have done it, whether or not we get more restrictions. There is also now a plea from the regional leaders to put in place tougher measures coming out of the federal government. So this is a government that in a way has been put together in record amount of time, that has taken hold and taken place at the time that it was supposed to do, but it's going straight into crisis mode. So it's not going to be an easy ride, and it's definitely not a honeymoon period for the new government.
Yeah, I mean, he'll have to, of course, hit the ground running. If you look at, the main crisis on COVID, do we know who he puts in charge of the health ministry?
Well, Francine, that's a big question. And, I know that we care a lot about the environmental ministry. We care a lot about the finance ministry. By the way, it's almost guaranteed. It's almost given here in Berlin, the political circles, that this is going to the FDP and Christian Lindner. But it really is the health ministry that remains a mystery. Just yesterday, there were a number of reports even suggesting that this was the most difficult job to fill. The person that becomes the next German health minister is going to go straight into a big crisis. Is going to have to make decisions and perhaps prove unpopular. And this is a job that makes you wonder who would want to take this job in this position. Again, we don't know who that person is, but right now it does seem to be like the job to watch out for. There's a lot of speculation. Not a lot of names have leaked. And this is probably, you could argue, the toughest job in Germany at this point.
Maria, thank you so much. Our Bloomberg, of course, Maria Tadeo in Berlin for us. Now, traders have a busy calendar ahead of Thanksgiving tomorrow. October FOMC minutes are due at 7 p.m. London time. We also get key U.S. eco data with the release of initial jobless claims, core PC, and University of Michigan sentiment gauges. Well, joining us now to talk about the markets and the Fed is Credit Suisse Global Chief Investment Officer Michael Strobeck. Michael, as always, thank you so much for coming on. When you look at what the market is looking at, so it's a little bit muted today. I think a lot of the focus is probably on, some of the policy on the Fed, but what could go wrong? Are you expecting a correction when it comes to equities?
Right here now, we don't really, Francine, expect a correction, but I also don't think that the pace of upward move is sustainable into the new year. We've seen a fantastic year again this year, largely because of the stimulus of the Fed. We'll take a careful note of their minutes. My expectation is that they will become a tad more hawkish, but not something that will upset markets right here and now.
So, Michael, where do you see actually the biggest value? And, because of this indecision on inflation and exactly, what kind of policy we could see and what kind of policy mistake we should worry about, what do you buy into?
Well, we have a focus right now on Europe. We've gone back to being overweight equities after the sort of small dip in late September into October. We went back in. As you know, we've had a pro-cyclical sort of risk-on view ever since actually the lows of March last year. We're back into being long equities in Europe. Germany, for example, is a country we're looking at. We like industrials right now. We like financials. We like small caps in the US versus large caps, sort of more, if you will, relative alpha trades, because as I said, I do believe this big, fast beta trade we've seen for 15 months, almost 2 years, that is not realistic for the coming year.
So, Michael, region by region, where do you see the best value actually right now? And do you like cheaper stocks, maybe Europe on valuations, or are they the ones that could suffer the most?
Look, so region by region, as I said, we have a particular focus on Germany, but also on Japan, also a cyclical play, quite cheap in our view. We like the UK. Coming out of if you will, the Brexit sort of correction, the pound was very cheap. Is certainly has gone up quite well. But UK is a commodity-oriented country or market. It is a value play. We like countries like South Africa, Indonesia, again mostly because we believe in a strong economic rebound and recovery into next year too, and those markets also focused tendentially on commodities are interesting to us. And within fixed income, we're actually very selective. In developed world, we like sort of BBB senior loan stuff in developed markets, and more regionally in Asia, we like investment grades. Actually, in hard currency bonds, China is one of the things that we prefer.
Michael, when you look at some of the things that we've been talking about day in, day out, I don't know what a policy mistake does for equities, or whether there's something else that we should be worrying about in the next couple of months.
I don't think so, to be honest. I think, of course, the central banks also don't have a crystal ball, and they're waiting to see where these inflation numbers are going. That will drive a lot of the decision making into early next year. We have in our books a rate hike by the Fed towards the end of next year, and then probably 2023 they will pick up the pace to almost perhaps 5 steps, so that we'll in this cycle maybe ending up at sort of 275 in the US. And with that, other central banks can follow, but the Fed will take the lead, and the others can only really follow because of the currency relations. And I don't think now Jay Powell is reconfirmed. I think their script is pretty clear, and that is they want to normalize. And our view is that they're not on a path for a policy mistake.
Michael, thank you so much. Michael Straubach there, Credit Suisse Global Chief Investment Officer. We'll talk a lot more about some of the energy prices and, of course, some of the COVID restrictions. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Later this hour, we also speak to the IFO President, Clemens Fußt. We'll discuss the latest figures on Germany's economy, as well as the new coalition agreement announced this morning. You can send in your questions on IB Plus TV Go. This is Bloomberg.
Is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever, but nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has 3 very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
The price of gasoline in the wholesale market has fallen by about 10% over the last few weeks, but the price of the pump hasn't budged a penny. In other words, gas supply companies are paying less and making a lot more. They do not seem to be passing that on to the consumers at the pump.
Well, that was Joe Biden, President Biden, speaking after he announced that the U.S. was tapping into its oil reserves, saying that it's unacceptable for gasoline companies not to pass on savings to consumers. Well, joining us back is Credit Suisse Global Chief Investment Officer Michael Strobeck. Michael, when you look at the price of energy, so we have these strategic oil reserves that have been released a little bit below what the market was expecting, and then now we expect or wait for OPEC Plus to say something. If we have this global war, I mean, is there a price of oil that makes you uncomfortable, with some of the valuations, not only on equities, but just the path forward for the economy?
I think right now we can sustain these price levels, Francine, and I don't see oil coming down very meaningfully from here. I mean, we have oil at 70 for the end of next year. And I really believe that the economy we're going out into is something that will floor oil prices at quite high levels. Secondly, OPEC understands that because of the whole debate about energy transition and so on and so forth, there is a time limit to how far we have in terms of fossil fuels in totality. And I think given some of the supply chain issues, some of the fantastically high pressure we're seeing worldwide on getting goods and things around, tanker capacity, harbor capacities, etc., etc. It's going to keep oil prices very flawed. And of course, yes, I mean, politicians now are coming out. I guess they are getting really worried that what people get out to in terms of an economy is one where price levels are really very high, which will put, of course, politicians under meaningful pressure to do something, because people will see, oh, the world has just become much more expensive for all of us, and there is a clear political will to try and avoid that. But it's all interconnected, and it will be very interesting to see what the German new government does in terms of energy policy too.
Yeah, so Michael, what's your take on when you look also at some of the, the COVID restrictions being harsher in Europe? Does that change the trajectory of what we're living through, or do you think it'll be short-lived? I know it's a difficult question, but it's probably the biggest risk to the markets right now.
I think, Francine, we need to get through this winter season, and then hopefully time will play in favor of one thing that will stop this pandemic from being the problem that it is, and that is the vaccination rollouts. There is an inverse relationship between vaccination rates and lockdown probability, and that we see in Europe. Austria has taken quite a clear step. I don't expect other major European economies to go down that route, but I do believe that this season will push out the economic recovery in Europe further into next year. Is it a big risk for markets? No, I don't think so. I think the central banks will therefore be even more careful to normalize too fast, and I think they're prepared to play on time.
What's your take on China? I mean, if you look into 2022, I know you're starting to put out notes on what to expect in the next 12 months. I mean, there's going to be, if not a correction, certainly slower growth coming from China. Will that impact the rest of the world, or will it be lower growth but more stable growth maybe?
Lower but more stable, Francine, is our take on it. I think we have seen the major sort of uncertainty around China growth sort of 2.5, 3 months ago, when everybody asked themselves, are we going to see sort of a systemic default situation around Evergrande and others? I think the Chinese will hold this very carefully in their hands. I think they probably will accept that it means lower growth because of the role of the real estate sector has played in the China growth story overall. But I think they can land this. I think it is very important to focus on China from a long-term perspective, and there we're talking sustainable China, cleaner China, green China, technology, all the sectors that China will either transition towards or are already very strong on, and that growth story for sure is not over.
Okay, Michael, when you look at some of, I think, the things that people look at less, I don't know whether you're interested in crypto or whether there's going to be, something new that you're looking at that clients want, maybe a fixed income rotation into 2022.
Yeah. Look, our main message, we're calling next year the great transition. We're coming out into a new environment where interest rates will start, in our view, drifting upwards, but also with inflation levels sitting at higher levels, growth rates sort of more in a boom-bust type situation. And there, I say to all clients, you should focus on what is in limited supply. And in limited supplies are real assets. Equities, real estate, private market opportunities, all kinds of things that central banks are not printing, including, which they're not, but they are in almost unlimited supply today, are government bonds that are in negative territory. And that shift, I think, next year is becoming more marked, and our focus really will be in convincing clients to slowly, in their strategic allocations, to reduce fixed income exposures if they haven't already done so. And cryptos is a special subcategory of something that is in limited supply. But it is not something I still have on my radar or in my allocations. We need more transparency. We need sort of more feel for what a regulator is going to do with them overall. Are they going to be labeled financial assets, et cetera, et cetera? And then we will see what role they will play in investors' portfolio. But for us right here and now, they're not part of our allocations.
Wonderful. Michael, thank you so much. Michael Strobeck, Credit Suisse Global Chief Investment Officer, joining us this morning. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we also speak to the IFO President, Clemens Fußt. We'll discuss the latest figures on Germany's economy, as well as a new coalition agreement announced this morning. Any questions, IB us. This is Bloomberg.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's focus in on the German economy. The Info Institute out with their latest business confidence index for Germany earlier this hour. It came in more or less in line with estimates, weakening a little from last month. Now the country's new coalition government will face the challenge of guarding the economy amid a new COVID wave. Well, joining us now is the Ifo Institute President Clemens Fuest. Mr. Fuest, we have a lot of news. First of all, we have a coalition. We'll have a press conference at 3 p.m. And then we also worry about lockdowns and really the COVID resurgence cases. How concerned are you about the winter months?
I'm quite concerned because we now have these two problems. Bottlenecks continue to be a problem, and on top of that, we now have these very serious COVID outbreaks. We see very clearly in the data that this is worrying companies as well. Services expectations are falling very quickly, in particular in hospitality and tourism. So in a way, the COVID crisis is back, and this comes on top of the bottleneck problems, which don't seem to be easing.
What are you expecting from the new coalition? And actually, what can they do at this point in time for the German economy?
What they can do is get back to actively managing the COVID crisis. In the transition, the government has basically done nothing, and that's a problem. So what I would expect is to increase the pressure for vaccinations, to push vaccinations, to do more in 2G and try to avoid lockdowns also for schools. But in order to do that, activities need to be limited to vaccinated people. At the same time, of course, the coalition needs to address the more long-term challenges, energy policy, guiding the economy towards medium-term growth. So it's a big job.
Yeah, do you worry? How much do you worry actually about the energy, crisis and the energy mix right now?
I think there's the short-term issue about how we get through the winter, how gas supplies are. That is one thing. But the other thing is, how about medium-term energy security? The new coalition wants the exit from coal in 2030. But how is this compatible with energy security? And energy security, in turn, is vital for corporate investment in Germany and for the future of Germany as a location for industrial production, though. So there is a lot at stake. And the challenge for this coalition is to make this a consistent story and to come up with a story that says, yes, energy security and competitive prices are not put into danger. Today in the afternoon, we will see the coalition's answer to this question, the coalition's plan, but it's very important to have a good answer here.
Thank you so much, Clemens Fuest. We're grateful for your time, as always, the Ifo Institute president there. And this, of course, is on the day where Olaf Scholz is set to succeed Angela Merkel as German's chancellor after forging this unprecedented alliance that aims to re-understand, revamp the largest economy in Europe by tackling climate change and at the same time promoting digital technologies. Now, coming up, JP Morgan's Jamie Dimon jokes that his bank is likely to outlast China's Communist Party. Will Beijing see the funny side? We have that story next. And this is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido
La planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá, nos reunimos con los oficiales de inteligencia de la policía. Nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Olaf Scholz to become the next German chancellor. The Social Democrats strike a coalition deal with the Greens and the FDP. We're live in Berlin. Treasury yields fall before the FOMC minutes, while traders continue to grapple with the prospect of a more hawkish Fed. Plus, JP Morgan chief executive Jamie Dimon quips that his bank is likely to outlast China's Communist Party. But will Beijing get the joke? Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first, let's check on the markets. A little bit of a move, actually, to the upside, certainly when it comes to European stocks. Before they were trading sideways, the focus firmly on some of the U.S. data later and firmly on the Fed minutes. There has been, over the last couple of months, a wanting to understand from the market about exactly what happens with oil gains, whether that feeds through to inflation. I'm also looking at treasuries in the U.S. Rising as traders tempered their expectations for monetary policy tightening after New Zealand's measured approach to rate hikes. Again, we also look at oil climbing as producers and major consuming nations headed for a confrontation. We saw the strategic reserves being released by the U.S. and other countries yesterday. Now we're expecting OPEC Plus to, I don't know whether it's retaliation, but certainly to come up and say something back. Now, Olaf Scholz to become the next German chancellor. That's as the Social Democrats, the Greens, and the FDP agree to form a new government. The coalition will take office as Germany weathers the worst outbreak of COVID since the pandemic began. Well, with more on all of this, let's get straight to Maria Tadeo in Berlin. So, Maria, Olaf Scholz, not even chancellor yet. That will take at least a couple of weeks if everything goes smoothly. But the pandemic is it's actually in a terrible state because we go into the winter months. Will that be his main focus, when he gets into power?
Yes, Francine, and this is a government that will be put to the test immediately, and Olaf Scholz is a chancellor that will go straight into crisis mode. Essentially, we're seeing these numbers coming out of Germany. The pandemic, we know, is as bad as it's ever been in the country, and possibly actually some forecasts suggesting that we're going to see the number of infections double in the coming weeks. Now, immediately, as I said, this is a big crisis for this new government, untested in many ways, a three-way coalition, never been done before in modern Germany, and he's going to have to answer some big questions, whether or not we see a bigger, stronger vaccine mandate, whether or not he decides to impose more restrictions. This has a huge social impact, but also economic, and then also how to deal with the regions, which at this point are saying we're doing everything that we can, but we need more action from the federal government.
Maria, thank you so much. Our Maria Tadeo there on the ground for us in Berlin. Now, JP Morgan chief executive Jamie Dimon has joked that his bank is likely to outlast the country's Communist Party. Dimon made the comment during a panel discussion in Boston where he also reiterated his commitment to the country.
I made a joke that the Communist Party is celebrating its 100th year. So is JP Morgan. And I'll make you bet we last longer. I can't say that in China. They probably are listening anyway.
Well, joining us now is Bloomberg opinion columnist Shirley Wren. Shirley has a piece out this morning entitled "Jamie Dimon Jokes, But Will China's Leadership Laugh?" You can read it on full on Bloomberg.com or on OPIN Go. Shirley is with us. Shirley, I'm such a big fan. I'm so excited you're here in the studio actually with me. I mean, this was pretty punchy. This is like a man that likes to live on an edge. We understand that it was a joke. Have we heard anything on on how China will take it?
So far, China has been quite silent on this. They're perhaps trying to figure out what they're going to do with these edgy jokes. I mean, it's pretty serious talking about Chinese Communist Party's longevity. That's a very sensitive topic for President Xi Jinping. I mean, the CCP just celebrated its first 100th birthday, right? But a lot of people in China feel like the nation is going the wrong way. The economic growth has slowed, wealth gap has widened, and President Xi was actually pushing out this so-called common prosperity drive to broaden China's middle class and appease his people, right? So this is a really, really touchy topic, and I'm surprised he actually said it in public.
Yeah, I mean, it sounds, honestly, from the outside, a bit of a PR disaster. I mean, how much is China worth to JP Morgan? And this is also at a time where China's just opening up some of the financial institutions. I mean, do we know, what, I don't know if it's retaliation, but what China could do if they take it the wrong way?
China can take everything away. I mean, JP Morgan has about a $20 exposure to China through its investing and the trading activities. It has expanded very aggressively in the last 2 years, especially in the private banking business. Swarms of relationship managers were looking for China's new riches, which is not exactly common, let's put it that way. So China could retaliate and really stop this U.S. mega banks entry into the world's second largest market.
I mean, so Jamie Dimon also spoke recently about wide-ranging issues. He talked about body bags in Taiwan. So I don't know whether the Chinese government would look at this and say, right, we're going to favor another U.S. bank, or why did chief executives even get involved in these kind of issues where it's not a direct question on strategy or foreign policy?
Oh, it's because Taiwan has been a hot topic among a lot of U.S. investors who have exposure to China. We see in the news flow that the geopolitical tension over Taiwan has increased in the last 1.5 months. And then U.S.-based investors say state pension funds, like college endowment funds, they need to ask, is there a war coming? And if there is, they have to sell off their Chinese stocks now because there will be sanctions and they will be forced to sell. So this is a very hot topic, and it seems like he was saying China is pretty smart. They're not going to want to see body bags. But that again is a very bad phrase.
Yeah, it's just very tricky. Do you think he'll get away with it?
Let's see. China can be quite deliberate in its decisions, and it might take quite a while. If the backlash is immediate, then it creates another media storm, like what happened with the tennis player, right? So maybe it could be gradual, but these are not good jokes, especially talking about CCP's longevity. It's not a good joke.
Shirley, thank you so much. Bloomberg Opinions, Shirley Wren, joining us, of course, on this story that really captured the imagination, one of our most read stories. And I urge everyone, actually, I'm subscribed to the newsletter of Shirley. It's fantastic reads every time, so go ahead, go to Opinion and read all of Shirley's columns. Now, coming up, we'll get into the push for stricter ESG goals with Marie-Jacques Cardoen, a global head of distribution at Edmond de Rothschild Asset Management. A conversation on ESG and inflation. This is Bloomberg.
You should be thinking about formerly incarcerated people as representative of their families also and of their communities. These are human beings. They're not disposable items. They are not to be warehoused, locked away, out of sight, out of mind. And so I'm out here in the public because I am the conscience of those folks of America, I hope. I'm hoping to prick their conscience and know that I am just a symbol of a much greater problem.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
There is still a lot of uncertainty about sort of the size and the stringency of the lockdowns that will await us. I don't think myself that it will have an impact on our intention to wind down the pandemic emergency purchase program.
Well, that was the Dutch Central Bank Governor and ECB Governing Council member, Klaas Knot, speaking exclusively to this program earlier this week. Now, the Bank of England is starting to enforce its green criteria in corporate bond purchases. It's establishing a blueprint for investing in a segment of the credit world rife with greenwashing. Starting today, the UK Central Bank will only buy bonds with environmental, social, and governance goals that meet its standards. So how are investors responding to the push towards stricter ESG goals? Well, to help us answer all of this is Marie-Jacques Cocardoen in Paris. She's a global head of distribution at Edmond de Rothschild Asset Management. The firm had some 155 billion euros in assets under management at the end of 2020. It describes itself as a conviction-driven house. Edmond de Rothschild is an active investor without index constraints, and it's 100% family-owned. So, Marie, thank you so much for joining us. A lot of the focus, of course, is on ESG and what can be done, also to avoid some of the greenwashing. A lot of asset managers have pledged allegiance to this GFANZ spearheaded by Mark Carney. What's the next step that you want to see to make sure that actually ESG is really permeating in all investments across the board?
Sure, thanks, Francine, and thank you for having me. It's great to talk to you again. I think, post COP26, what we really noticed is, despite the fact that the commitments that have been announced fall slightly short of the objectives of the Paris Agreement of 2015, we have seen significant commitments from the financial players to shift their investment towards decarbonization by 2050, and that does represent north of $130 trillion of commitment. There is no clear roadmap for investors post COP26, and the idea is that we all, and as asset managers, are going to have to do our bit and to focus on reducing our exposures to certain sectors or certain asset classes. But at Edmond de Rothschild, we're really focusing on transformation and transition. So really moving towards best practices as opposed to divesting investments.
So, if you basically say that, from your point of view, I guess COP26 and some of the framework haven't provided a clear roadmap for investors. Should investors be on the stricter side when it comes to sustainability? We also saw, some unlabeling of ESG products in Europe. I don't know whether you're expecting that in the rest of the world. And again, what kind of roadmap will you be taking for your asset manager?
So as an asset management house, we've in fact focused on impact and sustainability for a very long time. That's the story of the group and of the corporate, really, who as a family has invested in the real economy for centuries, and we continue to do so as a corporate as well. We have we own hospitals, we have education programs, and we are invested in the real economy as well via farms and vineyards and so on. And I think it's the asset management strategies that we have are in continuation to that DNA. We are giving our investors exposures to thematics that are going to benefit from the commitments that have been announced by the COP26. Yep. I think one of them is farming 4.0. I think social indicators like human capital is another example, and then urban development is another one. And those are all strategies that investors can access both on the liquid side and on the real asset side.
What about the transition? So we hear this more and more, is that, we need to transition, and that will take a long time, so it's still okay to, for example, invest in fossil fuels. How do you deal with the transition period? How long does it take? And again, how are you guiding your clients through that? Maybe with clients that say, well, I don't want to be part of, fossil fuels and things like that, even if we still need them for a short while.
That's right, and that's one of the challenges. I think different clients, depending on the nature of whether they're institutional or on the wholesale side, and depending on also the countries that we're looking at, would have different priorities. So we're really working with them to figure out what are the constraints that they're working under, and making sure that we're building portfolios that are in line with their objectives, putting both performance and impact at the same level. And that has resulted, for example, of a liquid set of strategies on our end that is 85% categorized either as Article 8 or Article 9. We've got funds that are labeled as well, and we continue to build that. Really listening to what our clients are looking for, and also what our objectives are in terms of impact investing. I think it's also important to perhaps notice that or mention that we have an investment team that's an ESG investment team that's fully integrated on both sides, liquid and illiquid. We're aligning the KPIs of our teams and our products with impact metrics, and I think that's what investors want to see as well.
I also wanted to ask you a little bit about inflation. So it's not 100% linked to, of course, ESG, but you could look at the transition and say, look, just because of the transition, what we're going through will be inflationary rich, or at least add extra pressure on inflationary portfolios. So how do you navigate that? And are you in the transitory camp when it comes to inflation?
Well, I think one of the big questions, and that's a really tricky one to answer, is where does inflation come from? Is it a supply chain issue in a world post-COVID, or is it an issue that's driven by too high demand? And the answer, or the underlying question, is really also what is it? Is it a temporary thing, or is it there to last? And therefore, the next question is, okay, but what is going to be the central bank response to that? And we've seen in the recently both Clarida on the Fed side and Schnabel on the ECB side giving indications that rates could be hiked perhaps earlier than first indicated. I think the stance that we're taking and that the market seems to take is that this is rather a temporary thing, and another question is it priced appropriately as a risk in the market? What we're seeing is really it hasn't affected the equity market yet. It has created volatility on the fixed income side, but we continue to see really good opportunities for clients on the equity side, specifically on stocks that are going to benefit from the commitments that have been made at the COP26.
Very quickly, because I know we're running out of time, but we have a viewer actually writing in. I love it when viewers ask guests questions, and this person says, going back to ESG, is the turn driven by clients or by the institution, i.e. your company?
I think I would say both. I think as a company, we've got a DNA of investing in the real economy for the long time. We think that finance should be put at the service of the real economy, and that wealth is not an end in itself, it's a starting point for change. but we're also working alongside and with our clients who have objectives that are oftentimes objectives where they want to see growth in their portfolio, but they want investment with purpose. So I would say that's a real collaboration.
Thank you so much. Great pleasure to host you again on Bloomberg Surveillance. Marie-Jacques Cardoen, their head of global distribution at Edmond de Rothschild Asset Management, speaking to us this morning from Paris. Now, as new COVID wave spreads across Europe, it's critical time for AstraZeneca. The British pharmaceutical company is also opening a new research center in Cambridge, and it has just started turning to a for-profit model for the COVID vaccine while struggling to be included in booster vaccine programs. Well, we spoke to AstraZeneca's chief executive, Pascal Soriot.
It's likely that this pandemic will be endemic over time. I mean, it is already more or less endemic in some geographies in the world, which means it will be like the flu. It will come back on a regular basis, and people may have to be vaccinated. Now, the question is, do you need to be vaccinated every year, every 2 years? We don't know that, and it will depend on the durability of these vaccines. So again, that's why we need more data, more follow-up. And collecting data is absolutely fundamental, because right now we are in the urgency of the moment, which is to stop this pandemic from spreading. But we also have to think about how we're going to live with this virus being endemic, like the flu is. And therefore, how often do we vaccinate people? Only time and data will tell us that.
Is that why you've recently also changed this, for-profit model? And would it have been wiser to wait for the WHO to call it an endemic instead of a pandemic?
Well, you have to think about the fact that the for-profit approach, which, by the way, as a reminder, is always going to be a modest profit, applies to new orders. So the new orders will be delivered mostly next year. So we are really talking about next year. Now, next year, hopefully, we will have, as a society globally, made even more progress in terms of vaccinating people. So that's the environment that you have to consider this decision, number one. Number two, our price will always be quite reasonable. So it will go from no profit for some countries to some profit for others that have more ability to pay. But we will always look for modest profitability, because at the end of the day, our company is about cancer, it's about cardiovascular disease, respiratory disease, rare diseases. And we will never look to make enormous profits out of this vaccine.
AstraZeneca Chief Executive there, Pascal Soriot, there on the new for-profit vaccine model. Now, coming up, Bitcoin slumps. That's as the Indian government prepares a bill to regulate cryptocurrencies. We've got that story next. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back. So India preparing a bill to regulate cryptocurrencies, which will be presented to Parliament next week. Now, the government is proposing to help the central bank create an official digital currency. News of the bill appears to have sparked a sell-off on exchanges popular with Indian investors. Well, joining us now is Bloomberg's Tracy Alloway, who also wrote a wonderful piece today called "A Huge Arbitrage Opportunity Has Just Opened Up in Crypto." First of all, Tracy, what are we actually looking at? This is, a pre-bill. So, what is happening in India and what's brought this on?
Yeah, well, I mean, this is a description of a proposed bill that was posted on the Indian Parliament's website on Tuesday, and it basically states that it's a bill seeking to prohibit all private cryptocurrencies in India. But that said, there is a ton of confusion and speculation around what that means exactly. But the initial reaction in the market seems to have been one of, for lack of a better word, absolute panic. So we saw a bunch of mostly altcoins that trade on Indian exchanges or exchanges that are popular with retail investors. Those just plummeted. I think at one point Shiba and Doge were down more than 20%. They appear to be far less affected on trading platforms such as Binance or Kraken. Bitcoin was down almost 14%, but I think it's just down, something like 0.5% according to Bloomberg pricing. So really, this is a localized sell-off that is currently focused in India, but I should just say things are beginning to settle down. Again, there is a lot of speculation over exactly what this means, and Bloomberg has just reported that actually India might be considering a proposal where it would treat cryptocurrencies as a financial asset, which would mean that large institutional investors are still able to invest and play in the space, but perhaps smaller retail investors are locked out.
All right, Tracy, thank you so much. Too short a time today, but we'll get you back on. I could talk to you about this for like an hour. And of course, this goes back into also what we're seeing in the U.S. with some of the crypto oversight taking shape, the roadmap and new policy. Or Tracy Alloway there. Now, you can subscribe also to Tracy's updates on NI Odd Lots on the Bloomberg terminal. Definitely listen to the podcast. It's just fantastic. Now, more Bloomberg Surveillance is up next. So we'll have all of your market moves. We'll, of course, talk about the Fed minutes a little bit later today. And then we're also expecting some U.S. economic news. This is Bloomberg.
years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I noticed that. Look, one of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Be less correlated than when it was, and there's a lot of divergence.
It's not only in the US, but globally.
I think the markets do ultimately prevail, and the supply-demand balances prevail.
This is Bloomberg Surveillance, early edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. President Biden sees light at the end of the supply chain tunnel. He says bottlenecks are starting to ease in time for the holidays. And he says that releasing millions of barrels of oil from the strategic reserve will make a difference. Changing of the guard, Olaf Scholz puts together an unprecedented coalition and will succeed Angela Merkel as Germany's chancellor. And will Beijing see the funny side? JP Morgan CEO Jamie Dimon is likely to find out after he jokes that his bank will probably last longer than China's Communist Party. I'm Anna Edwards with Tom McKenzie here in London. Kaylee Lines, of course, with us in New York. Matt Miller is off this week. Just one day then to go until Thanksgiving. Kaylee, there is a sense of that already in these markets. But what are you seeing ahead of the Thanksgiving holidays?
Well, it's going to be a really big day, Anna, because we get a literal truckload of economic data over the course of the morning here in the... And you had stocks up, but just by about 0.1% in China and Hong Kong, while Japanese equities lagged pretty hard after opening back up after a holiday. The Nikkei down about 1.6%. The real action in the Pacific, though, was in New Zealand. Yes, the central bank did hike rates by 25 basis points, but some economists were expecting more, and the guidance was actually quite dovish. So as a result, you're seeing the underperformer in G10 FX, the Kiwi weaker against the US dollar by about 0.6%. I would also just point out in commodities, the rebound continuing in iron ore for a fourth day, with futures up about 4.6% in Singapore. Now, as for the picture here in the U.S., ahead of all of that economic data and those Fed minutes, it is deteriorating as the futures session grows older. We are right around session lows when it comes to S&P 500 futures, down about 0.3%, though we are seeing yields coming in after rising for 2 days. Right now, the 10-year yield down about 2 basis points to 164, and that is giving a little bit of relief to gold after 2 days of pretty heavy losses. Gold futures up about 0.5%, and digital gold, as some call it, Tom, is on the back foot on this Wednesday morning, down 1.63% for Bitcoin, trading at $56,767.
Okay, Kaylee, here in Europe, you've seen a marked turnaround. Out of the gate, you saw some pretty decent gains for European equities. That has quickly shifted. There's some technical reasons for this. There's also potentially the politics in Germany. You do have the new Chancellor putting together the coalition. The UK, the FTSE 100 is the only major market that is still in positive territory, up 0.1%. That's on the back of basic resources. You pointed out the gains in iron ore, also oil prices as well. So the FTSE 100 is getting on the back of that. But everything else in terms of the major markets, the DAX down 0.3%. The CAC 40 is lower by 1/10. Technicals, but of course also that continuing concern about the spread of COVID and restrictions by governments across the Eurozone. We can switch it on and have a look at what else is happening across asset. You flagged, of course, iron ore gaining 3%. Brent, and looking past that coordinated action by the Biden administration and others, India, South Korea, and interestingly, China as well. Currently, Brent down a tenth or so of 1% at $82 a barrel. It was higher about an hour ago. The Stocks Europe 600 flat now after some healthy gains at the start of the session. So a bit of a turnaround, as I say. Euro dollar is at 112, pressure by 0.4%. Anna.
Tom, we've said it a few times, Kayleigh said it a couple of times, plenty of data to look ahead to today. So let's take a look at the agenda and what is coming up today. We'll start with the politics, though. Germany's Social Democrats, Greens and Free Democrats, that's three parties, are expected to present details of their coalition agreement in a news conference at 9 a.m. New York time. A lot of key positions still up for grabs. May have to wait a little longer to get those. But really interesting detail to see where these three parties can come. December rate decision from the BOE. And we will get plenty of US data out today. It will provide a snapshot of the pre-Thanksgiving economy. This will include the second print of third quarter GDP, weekly jobless claims, and the Fed's preferred price gauge, that is PCE, also consumer confidence or consumer sentiment. So interesting to see if it all points in the same direction or whether it'll be a much more complicated picture and take some time to digest. And we'll get minutes from the Fed's latest meeting. That will be released at 2 p.m. or those will be released at 2 p.m. New York time. Investors will scan the minutes for more clues on the central bank's tapering timeline and when it will raise rates. That conversation around tapering and whether it is sped up at all, Kayleigh, seems to be quite live still.
Yeah, and it's all going to center around inflation, and I assume that the price gauges that we'll get in the U.S. data today and those inflationary reads will also be what the market is focused on. And speaking of inflation, Americans are dealing with it when it comes to gasoline prices, and as a result, the U.S. is releasing 50 million barrels of crude from its strategic reserves in coordination with China, Japan, India, South Korea, and the UK. President Biden spoke about that yesterday.
Today, I'm announcing that the largest ever release from the U.S. Strategic Petroleum Reserve to help provide the supply we need as we recover from this pandemic. But we still face challenges in our economy. Disruptions related to higher prices.
Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from D.C. So, Anne-Marie, the president kind of had to be seen doing something here. What was the reaction from other policymakers?
Well, the reaction on the Hill was quite mixed, depending on who you ask. So Republicans came out and really lambasted what the president did, saying that we should be putting money towards producing America's own fossil fuels and really trying to make more of a robust industry at home. And then you had a little bit of a mixed picture from Democrats. I found the one most fascinating was Senator Chuck Schumer, who really hailed what the president was doing. But last year, when the Trump administration wanted to get in on the low oil prices and fill up the SPR, they had called it, including Chuck Schumer, called it a bailout for the oil industry. So you can see how politics is always playing when it comes to oil market and what's going on in inflation. But for the most part, the Democratic Party welcomed this in the sense that they do want to see this hit consumers, those consumers that are worried about higher gasoline prices. They think that this is one way to at least try to alleviate some of the pain.
Anne-Marie, good morning to you. Elsewhere on the Biden administration's agenda is putting together the attendees for a conference they're going to hold of democratic nations. December 9th and 10th, they're going to hold this virtual conference. And sending out invitations to a conference might not sound like a terribly controversial thing to do, but when democracy is in the type and you send an invitation to Taiwan, it might be. How is that going down?
Yeah, it certainly is. We already heard, Anna, this morning from China's foreign ministry saying that Taiwan should not be extending this invite. They're very much so against this. So this just really adds to that tension we have been seeing between Washington and Beijing when it comes to the island. And it's on the heels of the summit between President Biden and Xi Jinping, where the White House says the president reassured President Xi that there is a one China policy. The United States would continue on the Taiwan Relations Act. But just a few hours after that, the president was talking to reporters at an event. He said that Taiwan was independent. And then he had to go back and explain that what he meant was Taiwan needs to make their own decisions and they should follow the Taiwan Relations Act. So you can see how this confusion is causing a lot of angst within Beijing. And this is just another moment where we see that. We also should note that Russia has come out and said that they're disappointed and they're not invited on the list, but they're disappointed about how the U.S. is putting together this list of democratic nations, and they're very much so against it.
Yeah, the mixed messages on the US approach to Taiwan, the stance to Taiwan, certainly a concern for many China watchers there. Bloomberg's Anne-Marie Hordern in Washington. Let's switch focus to the politics of Germany then. Olaf Scholz is set to succeed Angela Merkel as German Chancellor after nearly 2 months of intense negotiations. Scholz's centre-left Social Democrats finalised an agreement with the Greens and the Free Democrats. Let's get more then with Bloomberg's Maria Tadeo, who's on the ground in Berlin. Maria, what do we know at this point?
Well, what we know at this point is that in a few hours, we'll get to know the details. They want to talk about policy. They want to talk about what this new government, which is a three-way coalition, untested in modern German politics, will look like. What we also know is that this won't be about names. As you know, there's a lot of interest, particularly around the finance ministry, the environmental ministry, but also now the health ministry for obvious reasons. This is a country that's dealing with a big pandemic. Now, that's for the policy, but you could also argue that none of these policies will matter for the next few weeks because this is a government that's jumping straight into crisis mode. This is all going to be about the pandemic, and Olaf Scholz will have to be first put to the test, but also answer questions about vaccine mandates, potential restrictions, potential regional lockdowns, all of this coming together, and it's a big test for, again, a first-time chancellor.
Well, speaking of the pandemic, Maria, a new COVID wave is continuing to spread, not just in Germany, but really across Europe, with a record number of cases reported in Germany. We spoke to AstraZeneca CEO Pascal Soriot on the latest.
It's likely that this pandemic will be endemic over time. I mean, it is already more or less endemic in some geographies in the world, which means it will be like the flu. It will come back on a regular basis, and people may have to be vaccinated. Now, the question is, do you need to be vaccinated every year, every 2 years? We don't know that, and it will depend on the durability of these vaccines.
And Maria, we've gotten reports earlier this morning that the EU is looking at revising COVID-related travel rules. What can you tell us about that?
I would say one thing, Kaylee. When we talk about this new wave of the pandemic across Europe, it's very important to know that it's not really across Europe. What you're seeing now is a picture, the divergence between the European, Central, Eastern European, and Southern European countries. To put a travel ban in the south of Europe would not really make any difference. The vaccination rate is very high, and the infection rate is way lower than it is in Central Europe. So this is about a number of countries that have proven very problematic so far. Now, in terms of the potential travel restrictions in the European Union, what we know, and we know this for the past 2 years, is that there is no political appetite in the EU to restrict travel between Europeans. This is one of the basic European freedoms. It's one of the basics rules of the EU, and they don't want to go there. You know, I would really struggle to see that there's a ban for Europeans to not go from one area to another one, because we haven't seen that in 2 years.
Bloomberg's Maria Tadeo, thank you for bringing us the latest on how policymakers are looking to put in place measures to restrict the spread of COVID across the Eurozone. Let's switch focus to comments from JP Morgan, the CEO, Jamie Dimon, joking that his bank is likely to outlast China's Communist Party. This is while he reiterated his company's commitment to the country.
I made a joke that the Communist Party is celebrating its 100th year. So is JP Morgan. and I'll make you bet we last longer. I can't say that in China. They probably are listening anyway.
Okay, let's get more with Shuli Ren, Bloomberg opinion columnist. Shuli, why did Jamie Dimon make this quip? I guess because we don't particularly know, but what could it mean for JP Morgan's business given the sensitivity of the issue within China?
I suspect that these are just his talking points to JP Morgan's investors and JP Morgan's clients, and he accidentally said the same thing in the public speech. Investors in JP Morgan have been very concerned that the bank was pushing aggressively into China, but China suddenly started this common prosperity approach, right? Basically, it's widely seen as an anti-capitalism approach. And also, Taiwan has been front and center in this whole China debate. If, say, there was a war breaking out on Taiwan, U.S. investors who invest into China via JP Morgan, they will have to sell down the Chinese stocks, right? And then that means that the sanctions could be coming, and even further sell-off will be coming. So I suspect that these are just the concerns that he had, and he just used the same words in the public speech.
So maybe there are things he says in private, and he just said them out in public, and it's raised a few eyebrows, perhaps in China. He also did, though, as part of his conversation yesterday, he did make the point point that he thinks China understands there are limits to the extent they control what people say about China outside China. So maybe he's just testing where the border lies, where the boundary is. I mean, is he going to get away with this kind of commentary? How will it go down in China?
Well, I think perhaps immediately China wouldn't respond because we have seen the whole global outcry over the tennis player Peng Shuai, right? Like if China responds now, there's another global outcry. They probably don't want to deal with that. But these words are out, these talking points, these sound bites out. So one day if China really somehow gets mad at JP Morgan, you know, they can be used in different ways.
All right, well, we'll look out for any potential ramifications. Thank you so much to Shuli Ren, Bloomberg opinion columnist. And now let's get back to the equity markets and take a look at some stocks moving in pre-market trading here in the U.S. And I have to talk about the retail players that reported last night. Nordstrom and Gap both plunging to the downside, down 27% and 18.5% respectively in early hours. The big issue here is they missed, and you can blame the supply chain. Nordstrom saying that its stores were short of key items like women's apparel and shoes, and Gap actually said they were seeing acute supply chain headwinds. So something to watch as we head into the holiday shopping season. A better story, though, for HP. Corporate demand for personal computers is rising, and the company is benefiting from it. So it delivered a beat, and that stock is up about 7.5% before the bell, Anna.
Okay, Kaylee, thanks very much. Coming up on the program, a snapshot of the pre-Thanksgiving U.S. economy, what to expect from the massive data release that we expect to get today, and FX in focus. We will speak to Minerva Analysis founder Kathleen Brooks. She'll talk to us about the dollar and the euro and everything else in between. Waiting for the dust to settle, why ARK founder Cathie Wood is holding off on adding to her bets on China. We'll get further thoughts there. This is Bloomberg.
Extra $1 trillion in spending, not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we frankly have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Welcome back to Bloomberg Surveillance Early Edition. Some breaking news courtesy of the ECB, and Panetta, one of the board members there, of course, saying that monetary policy should remain patient. So a host of commentary coming through from Panetta today. I wonder the broader relevance of this. Let's get to our Bloomberg Markets reporter, Justina Lee, who joins us now. That's just one line of a few I picked out there, Justina. Good morning to you. But saying that we should remain patient, or the ECB monetary policy should remain patient, a slightly different emphasis from the one we got from Villeroy of the Banque de France just earlier on this week. And arguably that pushed up some rates. It spooked stocks yesterday. We were down more than 1% on European stocks. Some attributed it to that. Is this some ECB pushback against not expecting too much tightening of policy?
Yeah, this is a really interesting comment because, like you said, the focus recently has been on what is the ECB going to do about rising inflation. But like you said, we kind of had a pretty strong market reaction yesterday, and it seems like this is setting up an intriguing divergence from the U.S., where, if anything, people are expecting even faster monetary tightening now.
Well, Justina, let's talk about the U.S. because, of course, we do get the minutes from the last Fed decision at 2 p.m. Eastern time, and that's after we get so much economic data. I don't even think I can count the number of data points we're going to get. What kind of catalyst could that be, given we're ahead of a U.S. holiday?
Right. I think a lot of traders are going to be watching what clues there are in the minutes as to how fast the Fed plans to taper those asset purchases. And I think that's also where today's U.S. data comes in. I mean, we're getting another read on the GDP numbers, as well as, another inflation indicator. I mean, currently, economists are expecting that number to go up a little bit, and I don't think anyone's really surprised by that. But I think going forward, people will be seeing, is inflation transitory after all? And people are going to be seeing what the Fed has to say about that.
How do you tie the oil price into that then? This coordinated action brushed off by the markets, it seems $80 a barrel on Brent. You're looking at 78 on WTI. How does that factor into the inflationary picture going forward?
Right. I mean, of course, the oil price is a big part of what U.S. consumers pay, and it seems to be putting a little bit of political pressure on President Biden. So it was really interesting that we kind of saw oil climb further. I think it's steady today, kind of after the headline yesterday. And it seems like, what's coming next is traders will be seeing how OPEC is going to react to that, because they didn't seem to think that, this release was necessary.
Yeah, we certainly saw some of our reporting ahead of the SPL decision around what OPEC's reaction function might be. But let's have a look and see. All focus on OPEC Plus then. Bloomberg's Justina Lee, thank you very much for joining us. Just getting back to those lines from the ECB's Panetta, then saying that the monetary policy should remain patient. We shouldn't be distracted by transient factors, so says the ECB's Panetta. More on the markets when we return. This is Bloomberg.
common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie alongside Anna Edwards here in London, Kelly Lyons in New York. Small protests erupted overnight in Istanbul and Ankara. Demonstrators called for an end to economic mismanagement that's unleashed rapid inflation and triggered the lira's longest losing streak in 2 decades. Erdogan's push for lower interest rates has led to 20% inflation. President Biden's Build Back Better plan has a tax cut for mere millionaires, but the mega-rich would pay more. That is according to data released by the Congressional Tax Scorekeeper. Millionaires would collectively pay a higher average tax rate next year, 33%. That's up from about 30%. But those earning only single-digit millions would end up paying less. Elon Musk has resumed selling shares in Tesla. He's now more than halfway to making good on his promise to offload 10% of his stake in the electric car maker. Musk has offloaded about $9.9 billion of shares. A chunk of that money will go to taxes. Meanwhile, a rocket from Musk's SpaceX carrying a NASA probe has launched on an historic mission. The probe will test whether it's possible to keep a speeding asteroid from crashing into Earth. If all goes well, next September, it will slam into a 525-foot wide asteroid at 15,000 miles per hour. The goal is to nudge it slightly off course. Neither the asteroid nor its larger parent body pose any danger to Earth, thankfully.
Absolutely. Has anyone seen the film Armageddon? I mean, I'm glad that there are scientists who are doing this stuff.
What, rather than Bruce Willis?
Rather than sending people up into space to land on asteroids, which seemed to be the mid-90s alternative, Kaylee.
Yeah, but I think it's interesting that SpaceX is doing this, and it really goes to show you have the likes of Virgin Galactic and Blue Origin that are focused more on commercial spaceflight, while SpaceX is becoming kind of something else entirely.
Yeah, just I hope they nudge it in the right direction. I'm sure the best brains are on it. Now, coming up on the program, Kathleen Brooks, Minerva Analysis founder. She'll join us. How long of the dollar, are markets right now? What does that tell us about where the dollar heads next? This is Bloomberg.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力的，都有的，啊，但要看怎么一个结局。说我们不做任何挑衅啊，但是说把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面啊，我们这样研判的。
China has, I've spoken with Xi about Taiwan. We agree we
we'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London and Kaylee Lyons in New York. Matt Miller is off this week. And we just had some really interesting lines dropping from China, and with Chinese tech in mind, Tom. China ordering Tencent to halt rollout of new apps and updates. This, according to our reporters on the ground. I mean, this just shows the nervousness around technology clampdowns by Beijing. We're kind of alert for the next leg of that, I suppose.
Yeah, for a couple of weeks, possibly a month, arguably, you haven't had a lot on the regulatory front. But Cathy Wood was saying, of course, of ARC, that she is still watching as the dust settles on the regulatory front. Tencent, of course, ubiquitous in terms of the WeChat app. They're not going to ban that. Absolutely not. It's just used too heavily. But they're very concerned about data. This is just underscoring that. They're going to look at the data, and in terms of new apps and rollouts of those from Tencent, they have been blocked for now.
Prosus, which is Dutch listed, owns a big chunk through Naspers of Tencent. The share price a little weaker, but not much on the back of that news. Kaylee, what are you looking at then ahead of the start of US trading?
Well, Tencent ADRs are not yet trading in the US pre-market session, so I'll wait and see if we see any action come the opening bell. But ahead of the opening bell, the future session is looking a lot softer than it did, say, 2 hours ago. And the same goes for the European equity session, with the stock 600 now lower by about 0.1% after being higher earlier on. And right now, S&P 500 futures are down about 0.3%. You are seeing yields coming in after 2 days of some pretty sharp moves upward on the 10-year Treasury yield. We're down now 2 basis points to 164. And then, of course, I would point out that oil has flipped into negative territory after 2 days of gains. The market really trying to digest, A, the strategic reserve releases from the U.S. and other countries, and B, what, if anything, is OPEC Plus going to do about it? Right now, WTI trading at $78.47 a barrel. Now, as for some stocks moving in pre-market trading, we have some earnings winners and some earnings losers. On the winning side, you have Pure Storage, which is a cloud and computer storage company. It beat expectations. It's up 15%. Dell, also in a similar story to HP, is benefiting from strong corporate PC demand. It's up the better part of 3%, but to the downside, two software companies, Anaplan and Autodesk, each disappointing in their results post-market yesterday, and as a result, they're down 17.6% and 13.5% each, Anna.
Kaylee, I'm looking at the dollar. I'm looking at FX markets. We're going to have a conversation on that subject right now. So let's start that by thinking about where the dollar is and what positioning looks like in the US currency. And for radio listeners, just to describe what I've got here, this is a chart showing leverage funds are net long of the US currency. That's what green means for TV viewers on here. It means net long. So the leverage funds are net long of the dollar, but are they becoming a little bit less net long as in the last couple of weeks or so, or the last month or so? We have seen, of course, that net long position coordinate with a rise in the US currency, and dollar strength has been a big theme of late. Let's get to Kathleen Brooks, Minerva Analysis founder, who joins us here in London. Kathleen, good to speak to you. So that's the positioning around the dollar. How does that weigh into your thinking about whether dollar strength continues from here? Of course, all the conversations about relative interest rates have been driving that narrative.
So we have seen some trimming of dollar longs, but not fundamentally in the euro, which is obviously one of the biggest currency pairs, the euro versus the dollar. So we still think that there's dollar upside to come. The dollar index, which is that basket of currencies, does tend to rise in almost multi-month channels. So we think certainly for the next kind of maybe into the first quarter of next year, the spring, the summer, we expect the dollar to do well.
So is the weakness we've seen in the likes of the yen or the euro more about dollar strength than particular weakness for either of those currencies?
No, I think there's definitely fundamental weakness in both of those currencies, and particularly in the euro. Not only have you got contrasting COVID infection rates and also the response to COVID with parts of Europe shutting down, you've also got a really rapidly shrinking trade balance in Europe. So that's also having an impact on the euro-dollar exchange rate. So what you're seeing is that there are fewer exports going out from Europe, largely due to deglobalization factors, does China slow down is really important. And until we see that trade balance get built back up again to levels it was in 2020, I think the dollar's going to do very well against the euro.
So the euro seems to be reflecting any kind of growth concern out of Europe stemming from this fourth wave of COVID-19, much more so than other assets. Why is it moving in kind of its own direction?
I think that's largely to do with the interest rate differentials, and that's really the main driver of FX generally at the moment, but particularly for the euro. You've got the ECB as a massive outlier. They are standing firm in their belief that they are not going to have to hike interest rates. That's in real contrast to other current countries, and particularly when you see what inflation is doing in the euro area. Inflation is rising at an absolutely rapid clip. You've got a fight within the ECB themselves, with Germany on one side, other countries on the other, and it looks like at the moment the doves are winning out there, and that's really being reflected in the FX market in a weaker euro, and of course that will to some extent benefit European stocks, we think, mildly going into the end of the year.
Kathleen, what we're really talking about is greater volatility within these FX markets. What does that mean? What is the read across, the sensitivity to the equity markets? Which parts of the equity markets are most sensitive to that volatility?
I think what's been quite interesting is that FX has become, it was a wallflower for so long in financial markets, and we're starting to see it really pick up pace. As you mentioned, the volatility is there. To be honest, the equity markets have really driven on their own path. They haven't been too impacted by that. But where we see it is if we are getting a stronger dollar, and if as we believe we are going to continue to see that, certainly into the middle of next year, that's very good for the commodity producers. That's very bad for US exporters, because obviously the stronger dollar will make their products less attractive. So I think we will start to see it. I don't think broadly, but I think in the US markets, which are ripe for a bit of a mix-up anyway, in our view.
Just lingering on the euro for a moment, because we just had this hour, Kathleen, some comments coming through from the ECB's, the Italian central bank governor, Panetta, saying that the ECB monetary policy should remain patient. So this, to your point about how there's this divergence. We have heard different lines, though, coming from the French. Just earlier on this week, we had these slightly more hawkish lines at the margin coming from Galois de Villot, and that seemed to weigh on risk appetite in Europe yesterday quite considerably. How does this all play out, especially with COVID resurgence, crucially, in Austria and in Germany, some of the more hawkish countries?
Yeah, I mean, it will be interesting to see if they tone down some of their hawkish rhetoric at the moment, particularly in Germany, where we've seen some mixed economic data. Obviously, it held up in October. Whether it will in November and December, that's a very different story. It's unsurprising that the Italian central bank governor, with a huge debt to GDP ratio, is going to ask for higher interest rates from the ECB. But France is a very interesting position because it's a really important part of the euro area, obviously, and it is somewhere in the middle, balancing, straddling both the more indebted countries, because it's fairly indebted itself, and also the more hawkish countries such as Germany. So there will be light pressure, but we don't think the ECB will cave, certainly not in the next 6 months.
Okay, and what do we need to be wary of? As we had, I mean, we're very aware of lower volumes perhaps at the moment. With move very quickly affected the yen, which has influence on markets. Is that something you're watching in emerging markets at this point?
Well, that can always happen in the FX market because it's just so big, and as you said, liquidity being a little bit thin, one stray move can have a domino effect. You know, obviously the Turkish lira is on everyone's mind. It's probably one of the most traded, dollar-Turkish lira is one of the most traded pairs right now, and we are seeing huge moves. It is by far and away the worst performer in the EM FX market. I think that we need to, certainly in the next couple of days, I think what you'll see is things will maybe calm down a bit, particularly if President Erdogan doesn't say any stray comments that could impact that market, but there's definitely downward pressure on the Turkish lira, as we all know, and that will be the key thing to watch. We have a deluge of US economic data as well coming out today before that holiday. So any mixes there. If we see a stronger than expected core PCE rate, for example, that could really send the dollar higher, and that will impact not just the Turkish lira, but we think will have a really strong impact on EMFX generally.
That's the Fed. We're also looking ahead to the BOE, December. The communication arguably hasn't been particularly clear out of Britain's central bank. We've seen a 6% fall in terms of sterling since June. Is there more pressure on the pound going forward, or are there some supportive factors here? Do you have a price target for the pound?
So we were quite bullish the pound, actually. So we were kind of looking for it to get back to around the 135 mark. But obviously the Bank of England scuppered our view a little by not actually pressing that interest rate rise earlier this month. Overall, I think with the Bank of England, what is going to be quite interesting, I think they're going to change and shake up their communications policy quite dramatically. And I think by the time we have the next inflation report, they're going to stop with the forward guidance because it's too tricky. But we do know that the UK is certainly weathering this COVID storm much better. We're further ahead in the booster, the COVID booster vaccination process than certainly some of our peers in Europe, but also in the US as well. That should protect the economy relative to elsewhere. So we do see the pound doing well, and we certainly see the FTSE doing well relative to some of the European markets.
Kathleen, really good to see you. Thank you very much for coming by. Minerva Analysis founder Kathleen Brooks with us on set here in London. Coming up on the programme, waiting for the dust to settle, why ARK founder Cathie Wood is holding off on adding bets to China. More next on that. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards and Tom McKenzie in London. Well, Cathie Wood says China is not uninvestable, but she's biding her time for now. The ARK investment founder and CIO exited most of her positions in Chinese stocks earlier this year, and she now sees a bit of an opening, but is waiting until valuations become more attractive. She spoke at a Bloomberg Intelligence webinar. Take a listen.
One of the reasons we built up our position in China in 2020 was because we saw China's response to the coronavirus crisis was much more responsible from a policy point of view, both fiscal policy and monetary policy, than many other countries around the world. And we thought, okay, maybe China is going to become the new Germany or Switzerland, known for its monetary discipline and fiscal discipline. But what happened in November of that year was somewhat startling. The episode with Jack Ma, and watching how he and many other executives who had created incredibly rapidly growing and exciting companies, they basically were told, and maybe there was some reason for it, but you're not welcome there anymore. You go off and do some charitable work or whatever the message was, and so that's what they're doing. We became concerned about that. While that kind of rhetoric and activity is taking place, so you're right, we pulled away very early, entirely out of our flagship, not out of all of our specialized portfolios, because in autonomous technology, for example, JD Logistics, JD Crypto.com. You know, they have low margins, very friendly from a capitalistic point of view, and they're helping to push new goods and services into tier 3 and tier 4 cities, which is great. But there was so much uncertainty created by one regulatory crackdown after another, and after we didn't know where it was going to stop. Now we're seeing a little bit of an opening up. We even with the online education, we see, okay, well, you can't tutor children after school, but you can tutor professionals. And so now there's a little bit more give there. But we think the valuation of the Chinese market has been hurt significantly by this, and that the way the Chinese market will have to grow and stocks will have to grow is if the underlying companies themselves grow. And so from that point of view, once we've reached the right valuation structure, and perhaps we have now, I don't know, we'll be listening to you know, what the Chinese government is suggesting that it wants next, and we'll be listening to what the companies are doing and watching what they're doing, and we'll act accordingly. And so the other point there is we've heard many investors say, oh, China's uninvestable. We don't think that's true. We're just waiting for the valuation dust to settle and to make sure that the incentives for growth reemerge. And, you know, China is a very determined country, and when it puts its mind on growth, that's what it gets.
Okay, ARK Investments' Cathie Wood speaking to Bloomberg Intelligence ETF analyst Rebecca Sin. Joining us now for more is Eddie van der Walt of Bloomberg Markets Live. And Eddie, timely lines crossing the terminal regarding Tencent, reporting out of Beijing suggesting that Tencent has been compelled to stop the release of new apps, concerns about data. We know that's front and center for the authorities in Beijing. What is your take of what we heard from Cathie Wood? She's trying to still read the tea leaves and get some clarity on the regulatory push in China.
You know, this is really interesting from Cathie Wood. I think when most investors think about Cathie Wood and how they see Cathie Wood, they think of her as somebody that they're going to look at for really long-term plays in technology. You don't think of, you know, necessarily in the first instance of somebody who's going to pick the geopolitics and pick the, you know, the regulatory environment in any given location. But she has been absolutely right in calling China. She got out at the right time. China has been underperforming this year. The stock market's been underperforming, and particularly because of this regulatory crackdown. What she's saying now is, look, we're looking for an entry point, right? We're looking for those right valuations, and then we'll get back in. It's not uninvestable for us. So I think it's really interesting. But these kind of headlines, like the Tencent one that you just mentioned today, they are worrying because there's a constant drumbeat. You never know where they're going to hit next. So if you've got big money that you want to allocate to a jurisdiction, that makes it very difficult if you don't know where the regulation is going to come down next.
Eddie, thinking of regulation, but of a different asset class, and that is crypto. Let me ask you about what's going on in India. So the headline story really caught my attention earlier. India to propose prohibiting all private cryptocurrencies. That was the headline story. A little bit later on, a story crept out that said India is said to consider allowing crypto trading for some investors. How much small print do we need to see to see how much there is to this clampdown?
Look, the devil is in the detail. If you're an Indian crypto investor, then it matters, right? It really matters exactly what you can do. The fact is, though, that India has for a long time pushed back against local cryptocurrency trading. This is not the first crackdown that we've seen. This goes back to 2018 and even earlier. India doesn't like crypto trading, and they are doing as much as they can to limit local interest in that space. So I think from a global perspective, I don't think that this is going to move the market very much, because I think there's already been big clampdowns. And I don't think, for all of those reasons, I don't think India and Indian traders are a force in the crypto market, just because the regulatory environment has been against them for a period of time. So I think from a local perspective, it matters a lot. If you want to trade currency in India, then it matters exactly what you can do. I don't think it's going to hurt Bitcoin very much, though.
Eddie, on Bitcoin, there is often a view that as you head into the year end, you're going to see a price rise. We've seen that in recent history with the cryptocurrency. But now you're seeing a greater correlation between the losses that we see in the equity markets and Bitcoin. Obviously not a hedge for many. Do you see a fundamental shift here for the top cryptocurrency?
That is such a good point, Tom. I think exactly. In previous years, crypto kind of did its own thing. When retail investors had money to spend, they went big on crypto, and it was a completely separate market. But as cryptocurrencies become more integrated, as we see more and more ETFs, we see more futures contracts, and we see crypto exchanges trading on normal exchanges, and then some overlap in terms of where they are traded in places like retail exchanges that also offer crypto facilities. It becomes more and more integrated in the global market, and the correlations with equities and with broader risk assets is rising. So the diversification benefits of cryptocurrencies is being diminished, but there's still that volatility that people love. So I don't think that this, that we're going to see less trading for that reason. But yes, I do think that these year-end rallies that we've seen traditionally, I don't know that we're going to be able to bank on them this year.
Okay, interesting. Eddie, thank you very much. The volatility that Eddie loves, at least. Bloomberg's Eddie van der Walt joining us there from the Markets Live team. Remember, you can get up-to-date analysis on crypto and a host of other asset classes. MLIV Go is the function to use on your terminal. This is Bloomberg.
Said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, so we still are seeing, like your reporters are seeing, some stockouts at sites around London and the southeast, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London and Kayleigh Lyons in New York. Tom Keene, co-anchor of Bloomberg Surveillance, joins us as ever this time of day to tell us what is on his mind. And I know the data deluge from the US later is on your mind, Tom, but also importantly, your own research on the price of a Thanksgiving dinner.
No, it's a tag team effort. Michael McKee will be with us at 8:15 to preview what we'll see at 8:30. And seriously, folks, it's the greatest dated time since mankind began. It's a very important set of data into the jobs report of early December and then on to the critical Fed meeting. And part of that data will be price dynamics. Let's go to the heart of the matter. It's over. Turkey deflation is so done. We've really seen a spike up here, Anna, this year. Seriously, it's a log chart, folks, and of course slope matters. Also gravy matters. Kaylee Lines understands this. There's a Virginia way that you make gravy that's more authentic than anything the Pilgrims brought over. Inflation's up 21%, guys. There was a Turkey deflation, a rollover over 5-6 years, and boom, up we go. It's up 21% this year. And of course, the Butterball people have a third of the turkeys in America. They price out at $1 a pound. Kaylee Lines this year going for the Cajun turkey at $169. And Anna, for your large family, seating 42. Williams Sonoma's got the 22-pound beast at $200 for the bird. I think it says Anna Edwards.
Don't believe the hype. My family not quite that large. I feel like a cultural intruder in this conversation, talking pre-brining turkeys and pounds of weight, Tom. But there is a serious inflation conversation, isn't there, here? And this is around food inflation, and this is around inflation in lots of parts of the economy, despite what we're hearing from the administration at the moment, which is that the bottlenecks are clearing. And there is some evidence of that from Bloomberg Economics.
Yeah, there's no question about it. And read your economics, what you do is substitute, and the great substitution going on seriously in America right now is chicken. We have moved from meat, which is shocking when you're at the grocery store to see what meat's done, and various sundry other protein enhancers. And the answers, and there's a little chicken shortage in America because that's where people are going.
Okay, Tom Keene, co-anchor of Bloomberg Surveillance, with some culinary tips there as we look ahead to Thanksgiving. The switch up from the red meat to the white meat.
Plymouth Rock.
The brining, the importance of the brining, the importance of the gravy as well, Tom Keene. Thank you very much indeed. Look at what else we are watching. Of course, I'm going to be monitoring anything that we see from state media in China or officials indeed on the back of this joke from Jamie Dimon of JP Morgan around the durability of his business versus the CCP, Anna.
Yeah, absolutely. And I'll be watching German politics just a couple of hours to go then until we get a briefing over in Germany. Scholz is set to succeed Angela Merkel as Chancellor. Where will all the other top jobs go to? It wouldn't be a surprise if we saw a sort of super ministry being created and going to the Greens around economy, climate and energy. Will finance go to the FDP, the right of this three-way coalition? More Bloomberg Surveillance is ahead. We'll hear from Morgan Stanley's Mike Wilson, among plenty of other voices. If you are not watching tomorrow, enjoy Thanksgiving. This is Bloomberg. When your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the quarter three was the quarter that was most affected.
Most of the central banks poised to either continue raising rates or start raising rates.
You've seen a Fed that needs to be quite nimble in their messaging.
It's hard to slow the economy to, just the right level.
Implied in this scenario is that the Fed is in do no harm mode.
What I think we're all mainly worried about is a Fed policy mistake.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. The Wednesday before the fourth Thursday of November, we welcome all of you to actually an active day. John Farrow preheating the oven at home. Kaylee Lines in for Mr. Farrow. And Lisa, it is, I'm sorry, front and center, a raft of economic data at 8:30.
Economic data which shows the jobs picture as well as the inflation picture, both of the dual mandates the Fed is looking at. We're also going to get the Fed meeting minutes at 2 p.m. The idea here being, what is the threshold for the Fed to accelerate their taper, to bring forward rate hikes? This is the big question that markets are looking at today.
We are setting up an equity show for you. We're going to get to that in a moment, but I do want to say Michael McKee to attend at 8:15 to give you a complete, comprehensive preview of truly the wall of data to set up the jobs report December and on to the Fed meeting. Kaylee Lines, Urian Timmer of Fidelity there saying based on cycles, we need to think S&P 8,000, not 5,000. That's the most bullish vision we've seen.
Yeah, granted it's 8,000, he said, out 5 years, but still that is very, very bullish. He says we are in a bull cycle and that it's far from over. It is interesting, and we'll hear from different people throughout the course of the show. You do have people who are that bullish. We're about to speak to one of them, and then you have the likes of Mike Wilson over at Morgan Stanley who say not so fast.
To join us later, and of course Thanksgiving is about humility, and Lisa, the humility here is the Bears absolutely humbled, a third double-digit year, and I'm beginning to see people, including BNP Paribas, talk double-digit.
Are you really coming to me with that? You're saying, it's a time for humility. Lisa, what do you have to say for yourself? Look, it's true. It's been horrible to be bearish in any way, shape, or form. But I will say this, and this to me is one of the big questions heading into 2022. There is a difference between being bullish on the economy and bullish on the stock market and vice versa. How much do we see momentum perhaps wane a bit in the economy at the same time that we see actually a little bit of a boost for stocks, or vice versa? Do you see sort of a steadying out in the economy and stocks sell off because of a normalization in Fed policy?
Kaylee, picking the short straw, Abramowitz here on Friday. Of course, Grandpa Abramowitz came over on the Mayflower, and she's cooking tomorrow, but she'll be here Friday morning.
Don't worry. I'm not going to subject anyone to my cooking.
Kaylee,
I was hoping for leftovers, because I'll be here Friday morning too, Tom.
The leftovers are the best. There's no question about it. The jar of mayonnaise will be acquired this morning. Okay, let's keep this thing on the road. Come on. I got to do my John Farrow imitation. Okay, I got to get there. Kaylee, what's important here is we're going to focus on the stock market, because that's been the shock of 2021.
Yeah, it absolutely has. And the question is it going to continue to shock in an upside way? Because again, it's been painful to be bearish. And it seems like the conversation really is revolving around tech and valuations and whether or not they can continue to be sustained, especially if we're entering a higher yield environment.
Let's go to the data on an active Wednesday. Seriously, folks, this is a full Wednesday. All the news flow we've seen, and of course what we see in Istanbul and Ankara as well. Dollar stronger off DXY, 96.73. Even the euro participating in weakness today, 112 at 10. I'm going to avoid Turkish lira right now. All you got to know is it's a little bit stronger. The stock market's giving me some red on the screen with the VIX 19. 0.96. The yield space, Lisa, what do I see in the yield space? It's a snooze, right?
Well, there's a little bit of a retracement after yesterday's sell-off. Actually, the interesting aspect in the rate space and in the credit space is that you are seeing credit yields blow out quite a bit. You're actually seeing yields rise to the highest in almost a year in the high-yield debt space. We can get into all of that. What I am talking about, though, right now is the data dump that we're going to be getting, which really does address the dual mandate of the Federal Reserve. On one hand, how tight is the labor market? On the other, how hot is inflation running? 8:30 a.m., the first data dump. We get U.S. initial jobless claims, the third quarter GDP print is the second print of it, personal consumption as well as durable goods. I am watching the unemployment claims, the idea here of how much resilience is there, how much did they go down? Bloomberg Economics expects them to go down to 240,000, of by far the lowest since before the pandemic. The consensus is 260,000. 10 a.m. U.S. October personal spending and income, University of Michigan November sentiment, October new home sales, and the PCE deflator. The interesting aspect to me is that income is expected to rise just a touch after falling. As you know, a lot of the government programs rolling off, although Bloomberg Economics expects it to continue to decline. But if you look at spending, it is continuing to outpace income. At what point is this unsustainable? At what point will the consumer start to push back? Also, the PCE deflator is expected to come in at the fastest pace going back to 1990 at 5.1% year over year. And a lot of people are saying the Fed must take notice of this. 2 p.m., the Fed meeting minutes come out. What I am looking for is anything indicating how much consensus there is about accelerating a potential taper. Come on, this is actually important. We're talking about the potential tightening of financial conditions. Tapering is not tightening. Yes, it might lead to tightening, but we're looking at a balance sheet of $8.7 trillion and climbing every month.
Lisa, it's the Wednesday before Thanksgiving. You're way too earnest. Look, here's the way it works. At the Thanksgiving table, Lisa, at the Thanksgiving table, they're going to look at the mashed potatoes, and they're going to be Some people like the mashed potatoes, but several people thought the cranberry sauce. I mean, that's the way the minutes are. Some, several, a few. You're going to get something out of the Fed minutes this afternoon at 2?
Yes, I am. I really want to know how much Rich Clarido is actually representing more of a mainstream view where the threshold is getting less high of a hurdle in order to accelerate the taper and possibly bring forward the rate hikes.
Kaylee, I'm so glad you're here. Let's start with our equity coverage this morning. Mike Wilson coming up later with a little bit of a cautious view. Greg Bottle and the team at BNP Paribas go the other way. They've come out, and this is with 30 years of derivative experience at the French shop. Greg Bottle, you mince no words, 5,100. What is the ratio that gets you out to a double-digit 10% return?
Well, what we're looking for is strong economic growth that is going to bleed into what we think is still going to be robust earnings growth. We do actually think valuations can compress a little bit, and you can still get to 5,100. So we think P multiples are going to come in around a point next year, which is pretty much in line with the average that you tend to see in the first year of a Fed hiking cycle.
At this point, do you think that consumers continue the boom as we've seen, even though income has started to decline with the roll-off of federal programs?
Yeah, I think so. One of the things you look at are the savings rates. So consumers are not just participating in a very hot labor market. There's also a lot of cash that people have around. Saving ratios are very high. So we certainly think there's a lot of pent-up demand out there. And if we start to see some of the supply chain bottlenecks slowly start to ease up a little bit next year, we think some of that pent-up demand will help drive the economy forwards next year.
All right, you say that you expect about a 10% total return in the S&P next year, even with this potential valuation compression. How much is that concentrated in the first half versus the second half of the year? As we've heard, a lot of people expect it to be front-loaded, as in the back end, we get that tightening.
Yeah, well, we think maybe it could be barbelled a little bit around the Fed rate hikes. We've had a look at the last 4 previous Fed hiking cycles, and you actually see a pretty consistent pattern, which is the equity market has tended to underperform in the first month to 3 months after the first rate hike. But then as the rate hiking cycle continues, the market tends to perform well. So if you look at 4 out of 4 of the last Fed hiking cycles, 6 months after the first rate hike, the market was higher rather than lower, and it actually accelerated from 6 to 9 months pretty aggressively.
Greg, how do you factor in your yield assumptions when forming an equity thesis, especially when it comes to some richly valued names like technology?
Yeah, I think we look at two things. One is the level, and the second is the rate of change. So in terms of the level, real yields are still deeply negative. So we're looking at a rate of change, which is going to put some pressure on valuations, but we're starting from a level in which policy is extremely accommodative. What typically happens at the start of a tightening cycle is the Fed are tightening for a reason. That's because the economic environment is actually a pretty constructive one for equities. So we do think there could be some multiple compression.
Yeah.
But it doesn't. But we don't think it's going to derail the bull market.
Greg, finally, if we can talk about the reality of the moment, which is there's no breadth in this market. There's a lot of bear market failure out there, and 7 stocks going up, up, up. What do those 7 stocks do here on a derivative basis? When you look at the dynamics of those 7 ginormous companies, how do you predict what they can do?
We've definitely seen some signs of euphoria and some signs of risk in the short term. Call volumes, open interest in calls, the amount of turnover of call option volumes in some of those larger cap names have absolutely exploded. So I think there are some signs of people chasing this rally. There are some signs of short-term euphoria, but I think that's more concentrated in the options market, in the technicals, and could drive a risk of a more short-term correction. But I think the medium-term fundamentals, I don't think there's enough on our radar to get us overly concerned at this point.
Greg Bottle, thank you for getting us started strong this morning on the equity markets. And it is our focus today, along with the economic data. You know, Lisa, we make jokes about it, but the answer is what humility is really needed, I should say, for 2021. It has been an extraordinary year of not so much missed calls, but just not getting the demonstrative call correct.
Well, and each call is very specific, idiosyncratic. I think about some of the biggest winners from the pandemic. I'm thinking of Zoom video communications, for example, which plunged 18% yesterday, is one of a number of the pandemic darlings that have really come off. And it turns out hedge funds were heavily overweight in some of these. When you talk about humility, you ride the crowd until you can't anymore, and that seems to be a theme.
Kaylee, the reason Zoom went down is I actually tried to log on to a Zoom meeting yesterday and went down in flames. It was
Blame Tom's lack of technical prowess. Yeah, exactly. But I think to Lisa's point, it's interesting. You're seeing some of these previously high-flying stocks like Zoom coming off, but the heavyweights in this market, a lot of those big tech players are continuing to do well. And that, to a large part, going back to your breadth comment, Tom, as long as they're doing okay, they can continue to carry the market higher in theory. The question is, as you hear all this conversation about a tech bubble or valuations coming into question with higher yields, how do you still be bullish in that environment?
Of course, our staff here at Bloomberg Surveillance all cut and chiseled, eating light and healthy for Thanksgiving. Because they're cut and chiseled, they put together a phenomenal Wednesday Bloomberg Surveillance for you. We'll stretch this right out to 10 a.m. This morning. What are we focused on? Yes, the economic data with Michael McKee, but much more. The equity markets coming up after Greg Bottle, Mike Wilson of Morgan Stanley, and Amy Wu Silverman will join from RBC Capital Markets. Stay with us. This is Bloomberg.
With the First One News, I'm Rishka Gupta. In Germany, Olaf Scholz is set to succeed Angela Merkel as Chancellor. Scholz has forged an unprecedented alliance that aims to revamp Europe's largest economy by tackling climate change and promoting digital technologies. His centre-left Social Democrats say they will present their agreement with the Greens and the pro-business Free Democrats today. In Turkey, the plunge of the lira threatens to erode President Erdogan's hold on power. Small protests erupted overnight in Istanbul and Ankara. Demonstrators called for an end to economic mismanagement that's unleashed rapid inflation and triggered the lira's longest losing streak in 2 decades. Erdogan's push for lower interest rates has led to 20% inflation. A SpaceX rocket carrying a NASA probe has launched on a historic mission. The probe will test whether it's possible to keep a speeding asteroid from crashing into Earth. If all goes well, next September it will slam into a 525-foot wide asteroid at 15,000 miles per hour. The goal is to nudge it slightly off course. Neither the asteroid nor its larger parent body pose any danger to Earth. A federal jury has come down hard on white supremacist leaders found liable for racially motivated violence in Charlottesville, Virginia, more than 4 years ago. Jurors awarded victims more than $25 million. Violent clashes left dozens injured. One woman was killed when a white nationalist demonstrator drove his car into a crowd. And JP Morgan CEO Jamie Dimon raised some eyebrows with his comments about China. In a speech in Boston, Dimon joked that his bank is likely to outlast China's Communist Party. He's also warned that a Chinese intervention in Taiwan, quote, could be their Vietnam. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
What do you think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Price of gasoline in the wholesale market has fallen by about 10% over the last few weeks. But the price of the pump hasn't budged a penny. In other words, gas supply companies are paying less and making a lot more. They do not seem to be passing that on to the consumers at the pump.
The President of the United States managing the message yesterday as he heads off to ACK for a family gathering. That is always a good and beautiful thing. With a Washington brief on a very sleepy Wednesday in Washington, Anne-Marie Horton joins us. You know, Anne-Marie, I look at the opportunities in Washington on Thanksgiving, and I think you really come up with it. You can do the Hay Adams with the blue chandeliers or the St. Regis, or you can wander across the grass to the Mandarin. And I love the idea of cutting down on your driving by going up to U Street, Ben's Chili Bowl, turkey sub, $10.45. That's what we recommend, Anne-Marie, for you. I'm sorry. I've tried it. It's really wonderful.
I'm happy to give it a try. I usually have an unconventional Thanksgiving because I don't eat a number of gluten-free, dairy-free, as Jonathan has told you about our last year's Thanksgiving. So I'll give Ben's Chili Bowl a try.
Tofu turkey, you're making me sick.
No, I won't do tofu turkey.
Anne-Marie, what the president knows, and frankly, Senator McConnell and gathered Republicans know, is people get in the car and drive for Thanksgiving. How successful was the effort to lower the price of a gallon of gas yesterday?
Well, if you look at the AAA this morning on the average, the president just there in that soundbite said the gasoline hasn't budged a penny. It has overnight. We were at $3.40 a gallon. Today we're at $3.39. But the timing of this is incredibly important because, as you say, Tom, politicians know this is a huge driving week, and this has been the issue for consumers. They're worried about inflation. That comes down to gasoline prices. That is chief when you look across the spectrum of prices going up. It is really gasoline prices that resonates with Americans. The question is, this SPR, many are saying, and if you look at historical SPRs, they are a Band-Aid. The president will be very lucky if there is a supply early next year, if there's more supply coming into the market. But the question really comes down to next week. Is this just a moment for OPEC Plus to now ratchet back some of their production they were supposed to deliver because of what these consumers have done?
But Anne-Marie, whether it's a dollar store going to $1.25 or it's turkey this year up 21% in price, seriously, folks, turkey's up 21% in price. I mean, this topic won't go away. How do they manage the message when they drift back from Nantucket?
It's going to be incredibly challenging because what we have seen the president do is take these speeches that were supposed to be about the impact of the social spending bill, the impact of the hard infrastructure bill. Now they've become, actually, these bills are about easing inflationary concerns. Yesterday, what they did was a little bit more of an immediate effect. The sense that we hear what you have to say, consumers, about higher gasoline prices. This is at least something we can do to try to alleviate that pain, even though, of course, it won't be immediate. This is their messaging of, we are hearing your concerns on inflation, but it's going to be incredibly challenging. And it's not just the United States that's dealing with higher inflation. I mean, this is global. Look what the numbers out of Germany were yesterday.
And, of course, there are international and unintended consequences of this, with OPEC Plus still to respond potentially, as well as the reality that a lot of traders have pointed out that a significant amount of the oil released from the SPR will actually go to India and China because it is actually a specific kind of oil, sour crude, that's more expensive to refine in the United States, but it is cheaper for some of these other nations. What's the pushback been on the international ramifications, both with OPEC Plus as well as where this oil is actually going to go?
So the administration, likely with the SPR, is just trying to get barrels onto the market, right? Try to alleviate the top line. And as we talked about yesterday, it really wasn't the impact of the announcement yesterday that has helped move oil prices lower. It was the verbal intervention over the past 2 weeks. So they were able to bring WTI from north of $85 a barrel to now sub $80 a barrel. I think we're at 77, 78. So it was that verbal intervention that really did it. Now it's the ramifications, Lisa, as you say. So for consumers, this was really historic. The number of consumers, the United States working with China, India, Japan, the UK. I didn't even know they had reserves. But the pushback will be from the Gulf. And Riyadh will have to make a decision what they want to do. And it comes as tensions are still incredibly fractured between this administration and Riyadh.
Okay, and it's not just there, right? It's also this question of the relationship with China, the idea that, yes, there was this kumbaya moment between the U.S. and China with respect to oil, and then at the same time, and Tom is doing kumbaya, at the same time, the Biden administration said, I know, that they're including Taiwan among the invitees to their democracy summit. This will be absolutely sort of thumbing their nose at China. How is this being characterized by the Biden administration?
Well, already China's come out and they said they firmly oppose this, but the Biden administration is extending that invite to Taiwan amongst 110 other countries to discuss democracy. It is an incredibly precarious moment because it's on the heels of that summit where President Biden has said to Xi Jinping, we respect the one China policy. And it was interesting because after that, the president had spoke to reporters and said Taiwan is independent. And then he had to walk that back yet again, another walk back on moments discussing Taiwan. And he said, what I meant was it's up to Taiwan to make their decisions, but we want them to follow the Taiwan Relations Act, which as a senator, the president had voted for. So this is clearly going to irk Beijing. But at the same time, the United States wants to make sure that they are making sure that they do have Taiwan's back in some sense. In October alone, China has sent more than 200 warplanes in the Taiwan identification zone. This is something that is incredibly worrisome in Washington.
Well, and it's not just China that's adversaries that may have a problem with this list, Anne-Marie. Russia's not very happy with it either.
And they're also not invited. So the Kremlin has come out and said that they don't agree with this list. And of course, they are not one of the attendees on this list. This could potentially add to issues with the U.S.-Russia relations, which are at the moment very, very tense, given what we are seeing on the Ukraine border with the Russian buildup.
Anne-Marie, thank you so much. Seriously, have a great Thanksgiving. Lisa, can we just do a trophy here for Bloomberg Radio Worldwide? Bring Anne-Marie back on if she hasn't stood up yet. I mean, she's got the pilgrim look down cold today. It's a Wednesday before Thanksgiving. She looks like Henry Wadsworth Longfellow, The Courtship of Miles Standish, where Priscilla Alden stood up Miles Standish.
I can't tell if this is a compliment.
Just take it as a thank you.
Or I need to go change.
You look fabulous. I love the look. Just go.
For those of you on Bloomberg Radio, she's in pilgrim black with a little white collar.
You're not totally wrong, Tom.
You know, I did okay there.
An Emmy for Bloomberg Wardrobe.
We can continue the show. Kaylee, let's go to 8:30 in the economic data. Michael McKee is going to be out here in less than 2 hours to really give a brief on it. To me, Kaylee, PCE deflator is a serious item this morning.
Well, all of the price gauges. PCE deflator, of course, is what the Fed in particular will be paying attention to. But as Lisa alluded to, personal income and spending that may be outpacing income, the wage conversation of the inflation conversation will come into play. And my question, Tom, is when do you start to see that trickling through in the ability of companies to pass on prices if consumers are starting to draw down their savings?
We will see. We've got so much to talk about here. And again, it's not the normal Wednesday before Thanksgiving. Good talk on equities. Amy Silverman, Mike Wilson will be with us with Morgan Stanley. A more cautious view. And on commodities, and particularly away from oil, Kona Heckle joined us, head of research at EDF and Man. She is excellent on the softs. This is Bloomberg. Stay with us.